or potentially in healthcare, or possibly within some portion of the private activity bond space. So our view is you see lesser, or potentially, lesser tax-exempt issuance on a go-forward basis. Again, has nothing to do with bonds that are already issued and already held by investors in the market, importantly, right? And that ultimately it drives scarcity value in the securities that are currently outstanding in the market. Folks buy muni bonds for two reasons: safety, surety of capital, right? Get your money back. And then two, tax-exempt interest income. We're about the only game in town for tax-exempt interest income. Supply, demand. Supply goes down. Demand remains the same. Prices go up.
Interesting. So one of those drivers you were mentioning was the tax-exempt interest. Is the expectation in your market that this will remain a vibrant market going forward? Because, again, there are some concerns there. Are you seeing any municipalities rush to get into the market, maybe sensing that maybe this exemption may be at risk?
That's an excellent point. Heretofore, we have not seen that. You might anticipate that just in terms of gaming out the probabilities here, even if you expect a wholesale limitation or larger limitation on the tax exemption going forward to be sort of marginal, you would likely, out of prudence, potentially want to get some of that issuance in, pull it forward before the actual legislation is passed, right? Last year, we certainly think we saw some additional issuance as a pull forward before the election. It would make sense now as these sort of, milestones are being hit or some of the concerns on the market are being hit, right? We know that tax exemption is on the list now, or at least under consideration. So it might be prudent for some issuers to pull their issuance needs forward to take advantage of the tax exemption while it still exists.
Okay, interesting. I'm curious. We were talking earlier with a guest about the natural disasters and the role that the muni market can play in that. What kind of questions are you getting from your clients about, say, the wildfires in LA?
Well, first of all, it's a tremendous human tragedy. It's hard to run into somebody in California from the state that doesn't at least know someone who's been impacted. So in terms of the questions that we're getting is naturally from a credit perspective, what might be impacted in the space? So sort of two sides, right? One is that historically, when we've looked at sort of these natural disasters in retrospect, there is very little long-lasting impact from a sustained credit impact on the area after the rebuild. Now, that's historically. Certainly, these LA fires are on a scale that we haven't seen before, right? Most recent estimates insured losses of $30 billion, almost 3x the largest fire that we've seen in California from an insured loss perspective. So today, for example, we saw rating agencies put on notice several credits within the space, including the city of LA, and basically a large number of utilities that do service the area with potential liability depending upon how the causes of the fire are determined over longer periods of time.
Right.
So, having said that, there has been very little, very few defaults in the market.
Right.
Limited defaults in the market.
Peter, thank you so much for joining us. Really appreciate it. Peter DeGroot, he's head of municipal research at J.P. Morgan, joining us on site here at BAM Mutual in Lower Manhattan as we talk about the municipal bond market here, a large market. But again, there are some issues out there. S&P 500 up about 0.5%. The Nasdaq's up 1.1%. Yields a little bit higher here today, up about 3 basis points on your 10-year. 4.56% on your 10-year Treasury. WTI crude oil, $73 a barrel. This is
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Lower Manhattan at the Brookfield Plaza here at BAM Mutual. 2 hours on the insights of munis and the opportunities. Paul is all in. He's been wearing me down. So I'm going to talk to my guy later on in February. Me down on munis. Taking a look at the markets here, we're recouping some of those losses from yesterday, but we're not quite there yet. The Nasdaq is up by a full 1%. The S&P is up by about 0.5%, along with the Dow Jones Industrial Average. Just taking a look right now at NVIDIA. Remember, it was the worst market cap loss of a single stock ever yesterday, and that stock is up by about 0.8%, Paul.
Yeah, and I'm looking at just, we have the big tech story. We're going to have the report on the big tech story in just a moment. It kind of just, DeepSeek upends Silicon Valley assumptions about AI costs. And I think that's kind of where I want to go with our next guest when Rachel gets here. It's just have the assumptions underlying AI that we've all been working on over the last 2 years, which is, hey, it's going to cost a lot of money for these tech companies, but boy, the returns and the payoffs are great. And it will make businesses and companies in all types of industries that much more efficient.
Yeah.
And so therefore it's a great thing for the economy and it's a great thing for productivity and all that kind of stuff. But then you get China coming in at a lower cost. And what does that mean to the whole story? So Rachel Metz joins us, Bloomberg's AI reporter. Rachel, I know you're out there in San Francisco. You're right there in Silicon Valley. We've had a couple of days to kind of process this. I know it's the subject of your big take story today. What's the feeling in Silicon Valley when you talk to your sources?
Hey, I think we're hearing a bunch of different things. I mean, I think some people are a little alarmed, a little bit surprised, but I think there's also a lot of excitement, frankly. Some of it may boil down to sort of what your goals are, what your job is. I think you're seeing a lot of interest and excitement from, such as from companies that sell these AI models to other people, like sell the usage of them, like company like Databricks or Cohere. I think they're really interested in seeing where this goes. Databricks CEO told me that they have a ton of customer interest in using DeepSeek. So that's really interesting to them from a customer perspective. But you could also see how companies that are making these models might be like, wait a minute.
Yeah. Well, and I guess the question is, how soon can Silicon Valley replicate the model that DeepSeek created?
Well, Hugging Face, which does a wide variety of things, including deploying their own models, hosting other people's models, stuff like that. They're doing it right now, actually. So they have, I'd have to check, so I'm not sure how far along they are, but they were replicating it and making it available to people. And I think they're going along at a pretty good clip. So other people could be doing that as well. And that's the sense that I get that they are starting to.
We've obviously NVIDIA and other chip names took just a huge hit yesterday, and I guess that kind of calls into question. Investors are questioning, do we need this much spending if somebody can come in here and do it at such a discount? How is that argument kind of festering over the last couple of days in your backyard?
Yeah, I think that people rightfully were a little bit concerned, right? And you saw the stocks really drop. But on the other hand, you're still going to be needing chips for all kinds of things, including AI processes. And it's important to keep in mind that these AI models that are mimicking the ways that humans reason, they're still very new. There aren't that many of them at this point. They're just not very far along. So it's not clear yet how much compute, where the compute in these cases is often, you're using a lot more of it at the end of the process than you would have with different types of models. So it'll be interesting to see. It would be, one thing that's important to keep in mind, though, I think, is that a number of companies have been trying to make their models more efficient for a while. Efficiency could be great. It could be great for the environment. It could be great for these companies in terms of keeping costs down. So I think that's why you see a lot of people excited about this.
Well, also, I thought it was interesting, NVIDIA's statement on DeepSeek yesterday. It was twofold. It was like, hey, they totally have complied with any restrictions on chips from the government, and they still were able to accomplish it, and we're super pumped about it. That feels like it's like, please don't put more tariffs on chips when we're exporting from the U.S. Is that in the zeitgeist at all in Silicon Valley?
Not that I've heard, to be honest. I mean, there may be people talking about that, but I feel like most people are concentrating more on the idea that this company has done something that appears to be quite interesting, and they've made some really smart decisions, and they're a really smart team. And I think a lot of people just find that really fascinating, and they want to know how they can do it too.
What do you expect to hear from some of the big tech companies that report over the next couple of weeks, their earnings, as it relates to AI and kind of maybe how the ball field may be changing?
Ooh, oh, that's a good question. I mean, I'm sure they're thinking about this and looking at this. I mean, it would probably make sense to hear more remarks about efficiency, frankly. I mean, that seems to be what this company has done in a few different areas. And I would be curious to see if other companies are thinking about how they can do that. I mean, I would assume investors would like that if they're being more efficient with how they're spending money and using resources.
Mm-hmm. All right, Rachel, thanks a lot. We really appreciate it. Rachel Metz, Bloomberg AI reporter. Definitely check it out on DeepSeek, just sort of changing the game over in Silicon Valley. We have another hour for you lined up on Munis. Could not be better. Also taking a look at the markets here as well. I want to point out JetBlue down a whopping 24%. An unbelievable move here.
Some of the airlines did really well, and some are struggling.
JetBlue really struggling with those costs. Well, for our listeners in the U.S., a reminder that you can listen to us via satellite radio on SiriusXM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121, presented by Oracle. Stay tuned for the latest market news and industry research.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live now from Lower Manhattan at BAM Mutual. We're breaking down the muni market, the risks, the rewards, and we always love talking about the tax exemption status. We have a great hour lined up for you today. We're going to talk to Nora Wittstruck, Chief Municipal Analytical Officer over at S&P Global Ratings. Plus, Sean McCarthy is BAM Mutual CEO. Talk about that supply and demand. We'll also make sure that we're hitting on all the market action as well. George Ferguson will be joining us from Bloomberg Intelligence on Boeing, plus some of the airlines, JetBlue getting hit pretty hard as well. But let's get you all caught up with what's happening in the market. Here is John Tucker with a business flash. John.
All right, and the major averages right now, they are pushing higher after the sell-off, the tech-led sell-off that we saw yesterday. The most active stock, yeah, you can guess that one, NVIDIA. Right now, shares of NVIDIA up just about 2%. The sell-off yesterday amounted to 17%. That was fueled by investor concern about DeepSeek challenging the U.S. tech dominance. But DeepSeek ultimately is going to prove good for U.S. stocks. At least that's according to Kathy Wood. She's the chief executive officer at ARK Investment Management.
Competition is great for the U.S., and DeepSeek is competition, no doubt about it. I'm hearing all of the titans, tech titans, speak of it glowingly. I don't think we know everything about it yet.
Right now, the NASDAQ 100, 190 points higher. That is up 0.9%. The S&P 500 up 37 points. That's a rise of 0.6%. We're at 6,048 on the index, and the Dow Jones Industrial Average is up 225 points. That is a rise of 0.5%. In the yield space, the 2-year is 2 basis points higher, 422 right now. The 10-year, the benchmark, is up 4 basis points, and that is at 457. You mentioned, Alex, JetBlue declining close to 25% right now. We're also hearing, this is according to the Fly, that JetBlue is talking with a, quote, number of carriers as possible partners, and they cite the CEO of JetBlue. We also did earlier today get that economic data, the Conference Board reporting its Consumer Confidence Index dropping this month to a 4-month low. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
And John, that brings up a good point, because remember, in the last couple of years, we've had some of these regional airlines want to merge and consolidate, but they were blocked by the government. It sounds like maybe this time they should let them.
With
JetBlue,
regulation
American,
light,
JetBlue, Spirit.
who knows?
What can get done?
Yeah, exactly.
Yeah, new administration. Maybe we can get some consolidation there. But we'll ask George Ferguson. But it seems like if you're one of the majors, United, America, Delta, you're fine for a variety of reasons. But boy, if you're that second tier, third tier down, it's a struggle.
You need that scale. You need to have those costs come down at the end of the day.
Exactly. So we'll talk to Mr. Ferguson about that coming up. Let's take a look at these markets here. Isabel Lee, she covers the markets for Bloomberg News. She joins us. Isabel, what are you looking at today?
I'm looking at Royal Caribbean. It's up 12%, so that's really impressive. The firm reported adjusted EPS that beat analyst estimates and extended its streak of quarterly profit beats. And the firm said its busiest booking period, it's called the wave season, is off to a record start. And wave season is when cruise promotions peak. So this happens usually during the first quarter. And bookings have increased since the last earnings calls, and the company is committed to an initial order of 10 river ships. So they're going to set sail some luxurious river cruises there. Kind of exciting.
I've heard that's a cool thing.
I've heard you're going on one this year.
Like the Passaic River?
Oh, we haven't booked. I thought
No,
we
we've the Passaic River, exactly, which does run behind me. No, we did. We booked Italy for the fall. No cruise this year, but we'll see how.
Okay,
it's still in the cards. But Charlie Pellet is our cruise.
He is. He
car
loves
spotter.
the cruise, but he loves a lot of things. So
He
there's
does.
that. All right, let's go to cars for a second. GM was so interesting because the actual numbers weren't terrible, but the stock's still getting hit.
Yes, it's a classic just expectation. It unveiled better than expected profit outlook, but really concerns about tariff threats weighed on the stock. So it's the forward-looking, as we always know. Adjusted earnings before interest and taxes this year will range from $13.7 billion to $15.7 billion. Jim previously indicated 2025 profit would be in line with last year's total. So Morgan Stanley noted that the forecast doesn't even account for any new policy on taxes, tariffs, or regulatory changes. And Bernstein said it was unsure the full-year guidance would provide much upside. So kind of lukewarm notes there from Wall Street. And that's why the stock is probably really edging lower, even with a great profit outlook.
And last up, you got AMD also. Does talk us through some of the chip action today.
AMD is unique because it's down 1%. The stock was downgraded at Melius Research to hold. Melius said it sees earnings risks given competition from NVIDIA, and the firm has a 2-year price target of $129 for the stock, and that's down from $160. But other chip-related stocks are paring back some of those massive losses. NVIDIA is doing okay, or at least more okay compared to yesterday, Broadcom, and others. So, I mean, it's normal to see a bounce back after such a really, I don't want to say bloodbath, but I can't
All right,
think
Isabel,
of a
thank you so
synonym.
much.
But
Yep, exactly. All right, we'll get you next time on that synonym. Isabel Lee, she's a cross-asset reporter for Bloomberg News, breaking down some of the market action today. Let's go back to the municipal market. We're joined by Laura Wittstruck, Chief Municipal Analytical Officer at S&P Global Ratings. She joins us here on site at Build America Mutual. Laura, thanks so much for joining us here. Assigning ratings, talk to us about the credit quality that you see out there in the municipal bond market. I can't remember the last time we had a Puerto Rico and Illinois. What's going on out there? It seems pretty good.
Yeah, thanks for having me. And I would say that, generally in 2025, I like to say that the municipal sector is cautiously stable. A lot of state and local governments are coming into 2025 still sort of riding some high liquidity and reserve levels based on the COVID relief.
Still?
Still, yeah. It had, they had to commit it all by the end of last year, but they have to spend it all by the end of 2026. So they still have some in their coffers generally. And I think also just the economy has been pretty good, and that helps state and local governments and other entities that we rate in terms of the demand that they see for their services.
When it comes to something we've been talking about the last hour and a half or so, are the impact of natural disasters and the LA wildfires. Like, how do you deal with ratings and natural disasters like that?
So we bake risk into our ratings, as you might imagine, as credit analysts.
But that probably wasn't on anyone's bingo card.
So we in California, particularly in the utilities sector, watching wildfires from a credit risk perspective because of the fact that the state has inverse condemnation, which means utilities, even if they are not negligent, can be liable for sparking a wildfire.
If any of their equipment is involved, even
That's
if they
right.
didn't cause it.
Yep,
right?
absolutely. So actually, LADWP, we lowered from AA to AA minus a few years ago because they choose as a decision not to de-energize their lines relative to wildfires. And that's fine for them to do that. It's different than some of their peers in California who do that. But because of that, they decide that because they're based in an urban area, they don't want to shut off their traffic lights. They think that the risk trade-off between the wildfire and human costs are not equal. So we lowered their ratings, and I think part of that is the inverse condemnation, but also it's just the fact that utilities are particularly susceptible to infrastructure damage during a severe weather event, whether it be a wildfire, a hurricane, flooding. So it's all been baked into our ratings. The actions that we took on LADWP were partly reflecting a recalibration of that risk as wildfires have come into more urban areas versus where they historically have occurred in rural communities.
I guess in response to the LA fires, President Trump, I think, has voiced some displeasure with FEMA and even suggesting maybe some of the disaster relief responsibilities at the federal level, FEMA, be put down at the state and local level. Some people think that's a good idea. My question is simply, can states and local municipalities afford that kind of stuff?
Well, we've historically said that FEMA is an important credit support for state and local governments. These disasters are increasing in frequency and increasing in cost. And absent federal aid, that would be a significant pressure for them, and absorbing all of the costs is just probably a little unsustainable at the current rating levels. I think what we are watching for is what he actually decides to do. Does he still decide to maintain the federal aid and shift it to a block grant for states, and then states are responsible for allocating it? Or, does disaster relief go away entirely? Those are two very different dynamics that we have to monitor in terms of how it relates.
What are the different options then for those two scenarios? How would each impact the muni market?
So I think if even a lower level of disaster relief for state and local governments, right now they typically get somewhere between 70 and 90% of the costs reimbursed from the federal government. Wow. If that goes to 20%, that's something that we'd have to consider. If that goes to zero, that's a whole nother decision on our part to determine what the liquidity and reserves of state and local governments and entities that we rate need to maintain as a buffer against these types of disasters. Now, if it just shifts from FEMA being the allocator and the distributor of funds to states in terms of a block grant, that probably could be even like a non-concern for us, if you will.
All right, as a credit rating agency, you get paid to worry.
We get paid to worry.
Aside from natural disasters, which can be an overwhelming topic, what are some pedestrian things that concern you?
Well, I think generally we look at long-term liabilities, right? So pensions and how state and local governments and other entities that we rate manage their pension systems. Typically, it's managed at the state level. What does that mean? We are increasingly seeing more people retire. So how do those costs get baked into the budget? States in particular are a safety net for Medicaid, and that's something that President Trump has also spoken about in terms of modifying that plan. States get a lot of money to support people that are vulnerable and need to be in those programs. How could that change the way states function and what they need to allocate resources to? I think we also watch labor productivity and labor workforce dynamics. I think one of the things that we noted after the election is that immigration has been good for our workforce in the U.S. It has really lowered the cost and the tightness of the labor market that has turned into high increases in salaries and personnel costs for state and local governments and entities that we rate. So a major change in border security could tighten that labor market right back up, and that could put additional cost pressures back onto these entities that we rate.
I mean, on the flip side, does it actually take away some of the state aid, though, also?
So it could definitely be a bit of a boost, right? So New York City in particular with asylum seekers had to absorb a significant billions of dollars in additional costs to help those individuals as they come into the city. That could definitely be a bit of a relief valve for them if that were to change. I think too, there could be some cost savings relative to Medicaid, relative to other social services that they need to participate in to, come survive once they get to the U.S. So that definitely there could be some offsetting improvements in cost savings relative to credit quality.
Maybe you can explain to me how life works. Florida,
Yeah, okay, let's do it.
Texas, no state taxes. How do they build schools and roads and things like that? Because my property taxes are really high.
Yeah.
New Jersey.
I mean, I own a 550 square foot condo and my property taxes are $10,000 in New York City. So I hear you on that. What happens in states that don't have an income tax? Typically, they securitize other forms of revenue. So they securitize gas taxes, they securitize sales taxes, they securitize property taxes, which is typically the way most state and local governments secure the debt obligations that they have outstanding is through property taxes. So yeah, you're right. Those taxes are high, and some of it will go to paying off debt obligations for the entities that we rate.
You don't feel good about that?
Yeah, I don't know. Why do I have to pay these high taxes? Everybody's moving to Florida to escape taxes.
It's true. No one likes paying the taxes.
Exactly.
Yes.
Well, what are some other key things that are that you guys are talking about right now, like on the desk?
Yeah, so I think, we're definitely watching federal policy. We're definitely watching how aspects of affordability cut across all of our sectors. So, I was the housing sector lead before I was the chief analytical officer, and we were watching, the lack of housing inventory and how that was affecting the entities that we rate, like state housing finance agencies and social housing providers, public housing authorities, how they're navigating that particular aspect. But it's playing out everywhere. So water utilities and public power utilities, some of which operate in LA County, we've been watching how they're raising rates to not only pay for deferred maintenance, but also for investment for adaptation to wildfires and other severe weather events. Some have been a little bit lax in doing that because it's been expensive to live in America, right? We've had an inflationary environment. We've had, higher costs associated with food. We've had a higher cost associated with utilities. Insurance premiums are going up for property and casualty insurance. So all of those things are weighing on management teams, and they're looking at how they can dampen those costs as much as possible. So affordability is something that we're really watching. We're also watching, just demographics generally. Our higher education sector has been plagued a little bit. Some institutions have had enrollment trends that are declining, which is a big input to our credit analysis because it generates money for public and private higher education institutions. When those trends decline, they have to figure out how to create revenue other than through tuition and fees. So demographics, the aging aspect of America, people leaving the workforce, people, lower demographic trends of people coming into education providers, all of that is something that can be kind of a disruption to credit quality.
Just got about a minute left. To what extent are you concerned about the tax exemption of municipal debt and perhaps losing that or having that be limited?
I think it really goes back to the question of affordability. So for us, we don't advocate for policies. We only sort of evaluate how the policies play out when we know the details of them. So initially, whether entities issue tax-exempt debt or taxable debt really comes down to the cost of their capital and how that gets baked into property taxes, sales taxes, other types of allocations of resources that state and local governments need to be making towards people, towards pension and OPEB obligations, towards disaster recovery. So if state and local governments, through losing the tax exemption, have to pay higher debt service costs, because they're issuing taxable debt, that is really just going to sort of funnel down to that affordability question and probably result in long-term increases, potentially to property taxes and other taxes that secure debt service obligations.
Nora, thanks so much. Really appreciate it. Learned so much. Nora Whitstruck, Chief Municipal Analytical Officer over at S&P Global. I feel like I really got, like, that was my...
You got it? All right.
That was my Muni 101 right there.
Thank you so much,
Nora. Really appreciate it. All right, coming up, we're going to talk more about the market. Steve Mann, Bloomberg Intelligence Global Autos and Industrial Research Analyst. And what's up with GM? Numbers seem solid. Stock is down. This is Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, the offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, seeing some recovery after the DeepSeek-inspired sell-off that we saw yesterday. We have the S&P 500 34 points higher, up 0.6%. The Dow is up 175 points, and the NASDAQ 100 193 points higher right now. That is up about 0.9%. And of course, the most actively traded stock today, shares of NVIDIA, they are up right now 2.5% following its largest value loss in history yesterday. Some of the other AI-related companies also kind of flipping between initial gains and losses. This includes the chip company Broadcom, right now down 0.4%. And then a quick look at Constellation Energy, lost an early gain to, it's now falling. Constellation shares are down 5.6%. This is the company that's built on expectations that's going to supply the electricity that the AI centers would gobble up. The best performing stock right now in the S&P 500, that's Royal Caribbean, cruising to a 12% gain, higher after the cruise operator topped analyst profit expectations for the end of last year, benefiting from stronger than expected demand. General Motors, the worst performing stock in the S&P 500. The automaker's outlook for this year doesn't match up to the high expectation from investors. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are live at BAM Mutual, Lower Manhattan. We're at their offices today talking about the municipal bond market, but we're also talking about stocks in the news. And as John Tucker was just reporting, General Motors, I've been doing the stock market thing for 35 years. I still don't get it. I mean, the better than expected results for GM. Okay, the guidance maybe was a little bit light. You knocked the stock down 9.5%. I mean,
yeah, I'm not sure about that.
I mean, who's in charge?
Also, wasn't it all good because of Cruise and like they're dumping Cruise? So then they did that? I don't know.
Yep, I don't get it. Maybe our next guest can help us out here. Steve Mann, Bloomberg Intelligence. He's the auto analyst over there. Steve, can you explain to me what the stock market's doing today with our friends at General Motors?
Yeah, I think the stock had a nice run up last year. The management team has done a great job in actually managing investors and managing the challenges that's in the U.S. market that the other companies, Ford and Stellantis, have been facing. I think the expectation has actually ran up through last year, and we got some negative news, mixed news in terms of the outlook. The tone has changed. This is the first time that GM actually is a little bit worried about the end market since COVID. So that's why the stock is down today.
Well, what did we learn about GM and its actual EV units? Like, were sales better than expected? Like, is the trough passed?
Yeah, sales, especially in the fourth quarter, it did run up. Some of that may be some channel inventory stock building, anticipation of better sales in 2025, and that's one of the key issues. I think the investors are concerned. There's going to be a mix change. They think that increased EV sales will offset some of the more profitable truck sales in 2025. So, based on our estimates, like it seems like even their adjusted EBIT margin of 8 to 10% may be a little bit too high. They may fall actually at the low end of that range, or maybe even below. And that's something that I think the stock price is getting, is reflecting on that potential, even the potential miss on the guidance for 2025.
Shutting down the cruise business, like the robo-taxis, taxi thing. Yeah. Is that a good move?
Self-driving, yeah.
Yeah, self-driving.
Yeah, that is a very good move. Well, in hindsight, maybe not. Now that we heard about DeepSeek and how cheap they can actually build AI. Maybe that's something GM can actually think about doing. But that aside, I think they want to focus on their core competency, which is building cars, working with the vendors, working with the supplier to build a car that the customer wants. And at the end of the day, AI will really suck a lot of the CapEx spending and divert their attention away from what they do best, which is building cars for their customers. So I think it is a good move for them to move away from cruise and maybe explore, partnering with people that actually do autonomous vehicles really well, and actually build those capabilities in their vehicles in the future instead of building it themselves.
Mm-hmm. All right, Steve, we appreciate that. Thanks a lot. Steve Mann joining us, Bloomberg Intelligence, global autos and industrial research analyst. Just some breaking news for you, Paul. Julius Baer set to cut hundreds of jobs and reduce executive headcount. So is this the time of year?
It's a time of year where, on Global Wall Street, it's pay the bonuses, evaluate your people, and make any changes to headcount you need to make at all levels. And that's kind of what we're seeing across Global Wall Street.
Is what we are seeing. That's the latest. All right, let's go to more on the muni market, because we're right here in Lower Manhattan for BAM Mutual. We're going to dissect all areas of the muni market. Joining us now here on set is Mark Paris, head of municipal bonds over at Invesco. Mark, good to see you. Thanks for being here.
Good to see you. Thank you for having me.
Let's pretend like I don't invest in munis, and somebody has been telling me for a while to invest in munis, and then I come to you and I say, hey, what should I invest in munis? What do you tell me?
So I think that the best part about the muni market is it's not what you make, it's what you keep. And so the tax exemption is really key to investors. And I think that the basic concept is that school districts, hospitals, toll roads, they get to invest at a lower interest rate because what they pay is tax exempt and the investor can gross it up. So my advice to investors is you want to have a diversity in your portfolio, whether you create that or a manager creates that. You want to have knowledge of what you own. My kids always joke with me when we go to a town. They say, "Oh, Dad, I know you own the hospital, you own the toll road, you own the university."
But they know what you do. That's so nice.
Well, they're older now, but the idea is that these are things that you can see, touch, feel, drive on, and they're good projects. And as you heard Nora talk about the credit quality of the muni market, it's a fun place to invest in. It's a tax exempt place to invest in. And then if you get into lower credits, then you're going to want a professional money manager to help you out if you want to go out longer on the curve or things like that. But I would say diversity is important, and I would say that these are the things of essential services that we live and breathe every day.
What are some of the sectors that you guys like these days?
So I think transportation is really a key sector in this country, whether that's a train line in Florida or airports. I always have people come into the city to visit me, and they come through LaGuardia, and they say, wow, that place looks so different now. Well, we just redid it.
Oh, man. Yeah, but that was a long time coming, but okay.
That was a long time coming, but now JFK is going through the same process, and they had bonds. So airport bonds, great origination and departure fees, the concessions that go on at the airport. We see that transportation part of the economy is always sort of, humming here in the United States. So that's been a good part of what we do. We also like toll roads. We also like water and sewer. We like to say you wake up in the morning, you turn the lights on, we own the power company. You go to brush your teeth, we own the water company. You get in your car and go to work, we own probably the toll road that you go on. So, we like essential service revenue bonds, but we'll also buy some universities, some hospitals, but that's where you want to do a little bit more credit work.
Okay, right. So I was going to say, where are the riskier parts in the muni market? I mean, clearly, like what you're saying, the infrastructure, tolls, water, like that feels like the safety bet in the muni market from what you're saying. Am I right in that? And then where's the risky bet?
Yeah, absolutely. Look, I think you have to look at smaller universities these days, universities that are private, that have smaller enrollment, smaller endowment, that are kind of changing their standards to get people in, and that may have too big of a debt load. It's the same thing as in the corporate market. It's a matter of how much leverage a borrower takes on. The hospital sector has been interesting to us because some of them have spent some of their COVID money a little too quickly. But then again, you have hospitals that are doing elective surgeries, hospitals that are in the birthing business that are doing just fine. So, credit work is really important, not just to say I don't like that sector or there's bad news in that sector, but what are the actual individual credits that are going on? We are a finite market. Once an issue comes to market, it's going to trade for a while, then it's probably going to disappear. So it's really important to do individual credit work on some of the different aspects of some of the lower credits.
As an institutional investor in this market, how do you rate the risk of the taxability, losing some of the tax efficiency of this market, whether it's some change in tax laws or anything like that?
So I think it's a headline that we have to watch, but I think the headline is going to outweigh the actual changes that happen. I think there may be some tweaks. I know that the House Ways and Means Committee put it on their list, but it was kind of down the list. And if you look at what they had adjusted for the cost, it was somewhere in between the savings. I think Nora was very on top of things in her answer, where she talked about the fact that other things will go up if that happens. It's a difficult thing to do too, because what do you do with the existing bonds? You probably have to grandfather the existing bonds. You cause a bifurcated market. We saw this before in the muni market, mostly after the global financial crisis, and what we found was there was a really good grassroots effort of school districts and hospitals and universities to say, hey, we don't want to borrow at the higher rates. It's not a good idea. So obviously, in this administration, we're going to have to wait and see how things, kind of play out. But I'm not one of those, folks that's in a panic over it. I think there's going to be a lot more headlines about it, but I just don't see a higher probability of it.
Knowing very little about how the muni market works, where do issuers usually issue along the curve, and where is the best value?
So it's interesting that we used to just see long paper, 30-year bullets or 30-year, 10-year calls was really a standard thing to do in the muni market. Separately managed accounts have become such a big part of investors' portfolios of the products that we offer in the muni business. And so there is a lot of issuance, 0 to 10 years, 5 to 15 years. We actually like sort of the 20-year part of the curve. We think that, the muni curve does have its steepest curve in the fixed income market, and that's because investors want more yield for longer periods of time that they go out, just like they want more yield in more credit risk that they take. But the 20 to 22-year part of the curve to us looks really attractive, both on a percentage to treasury basis and where you get the most bang for your buck while not going all the way out on the curve.
All right, 30 seconds. Are you guys active buyers of new issues?
Yeah, absolutely. I'd say sometimes it's 50-50, sometimes it's 60-40. We do a great job of negotiating with the underwriters and making sure that the issuer understands what our concerns are, whether that be getting a mortgage or a debt service reserve fund. And then we help structure the deals, what type of coupon we want, what type of call they want. So there's a lot of back and forth.
You just don't pick up the phone and take my sales pitch.
No, we don't.
Ah, interesting.
That's cool stuff. Mark, thanks a lot. Really
Thank you so
appreciate
much.
it.
Great
Mark
to be
Harris,
here.
Head of Municipal Bonds. You were definitely welcome back. He's joining us at Invesco right here at BAM Mutual. All right, coming up, we're going to continue the conversation with Sean McCarthy, BAM Mutual CEO, right here in their offices. Get the read there on the market. Okay, let's get an update on where we stand in the markets here. We're looking at an S&P up by 0.4%. You have a NASDAQ up by 1 full percentage point, and the Dow Jones Industrial Average up by about 0.1%, but haven't really reversed those losses in the NASDAQ that we saw as of yesterday. A little bit of selling also in the bond market. We have a 7-year auction coming out later today, $44 billion. Yeah, Paul's excited. And you're seeing a little bit of bonds on offer, particularly on the back end. This is Bloomberg Intelligence. Happy Tuesday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they're high right now, but coming off the best levels of the session. NVIDIA, the most active, rebounding some after yesterday's 17% plunge. Right now, shares of NVIDIA up 3.3%. Meantime, Seema Shah, principal global investor, says, you know what, yesterday's DeepSeek-inspired tech sell-off may be an entry point for a lot of investors. We also today have shares of Apple. They are the index point leader in the NASDAQ. Shares are up right now over 4%, 4.4% to be exact. Among other things, they could be a major beneficiary of the cheaper AI offering from a company like DeepSeek. The Conference Board reporting its Consumer Confidence Index dropping in January to a 4-month low. The data suggests Americans are taking a dimmer view of the labor market as well as the overall U.S. economic outlook. Let's recap for you. S&P 500, 21 points higher. That is up 0.4%. We're at 6,033 on the index. The Dow Jones Industrial Average right now, 24 points higher. And the NASDAQ 100, 161 points higher. That is up 0.75%. Real quick in the yield space, the 2-year is up 2 basis points. That is at 4.21. The 10-year yield, 3 basis points higher, and that is at 4.56. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are live at the offices of BAM Mutual, Build American Mutual. They're down here in Lower Manhattan. I call it the World Financial Center. I think they now call it Brookfield Place. That's what the kids are calling it. I don't know. We are with the leader of Build American Mutual, BAM Mutual, Sean McCarthy, BAM Mutual CEO. Sean, we've been here coming many, many years. Last year, I think in 2024, there was $500 billion of new issuance in municipal bond market, a record. A, what drove that? And B, what are your expectations for 25?
So first, thanks for being here. It's a really great tradition, and we really enjoy being the host. So last year was a record year at $507 billion, and I think the big driver there, interestingly, was new issuance for infrastructure projects. Okay. So 75%, $335 billion worth of paper that came was for new schools, bridges, tunnels, roads, hospitals. So really essential public purpose infrastructure. And I think that's going to continue. If we look at, as an early indicator, the number of referendums that were approved, in California alone, there were $50 billion worth of school bonds that were approved. Nationwide, there were $100 billion worth of new projects that were approved. So we can see that there's going to be a huge demand for projects that have been deferred in some cases over 10 years. So.
Oh, what about demand? Just in terms of the older the population gets, the more that tax-free incentive might be more interesting to people. Like, what are you guys noticing on demand?
So, for us, we focus, at BAM, we only guarantee municipal bonds. And so I think the real demand, as you've put it, both for separately managed accounts or for direct retail or the big funds, there is a value proposition that was described earlier. In essence, people want more to take home. And so the tax exemption on the bonds serves two real core purposes. First, it lowers the cost to build these essential infrastructure projects. That's critical. The second thing is it provides a tax advantage so that actually investors can feel like they're part of building America.
What percentage of new issuance gets your insurance from Build American Mutual? And is it a need thing? I need your insurance to make it a lower rate? Or?
So no. So basically, what bond insurance does is we're a AA rated company from Standard & Poor's, and so essentially we put our guarantee on a municipality's debt to lower the cost of borrowing. So think about it as you co-signing your kid's student loan. So if you think about it in those terms, you want them to get a job and you want them to pay back their student loan, but if they don't, you're paying. So we acted in that role. We are guaranteeing timely payment of principal and interest when due on the bonds. And so that does two things. It makes investors comfortable that they have liquidity, a higher rating, and it lowers the cost of borrowing for all of these.
And is that
municipal
widely
projects.
used by issuers?
So if we think about the overall market for utilization, I'd say it's around 10% of the overall market. But the important thing to think about is that bonds that are rated AA or better don't use bond insurance because they have a strong rating on their own. Yeah. And there's a certain class of bonds that are, lower rated than would be acceptable for the industry. And then there's certain sectors that aren't guaranteed.
So we've been coming here for, 7-9 years, right?
Yeah,
Something like that. What's the biggest change that you've noticed, like in the last decade, in terms of what we cover, what you cover, in the zeitgeist of the muni market?
So I think the muni market's changed quite a bit in the last decade. And it's had a lot of events that it's really addressed handily. So if you think about, for example, COVID, I mean, it feels like COVID was ancient history, but think about that. People stayed at home. So bridges, tunnels, airports, toll roads, just what their utilization was dropped precipitously. And so the market withstood that. There were really, in essence, very few defaults on those transactions. And so what you see happening in the market overall is this, I think, pent-up demand for new projects. I think a lot of people, because of COVID and because of federal monies that were given to them that have now sort of burned off, you can see this pent-up demand to come with your new project at this point and come into the market.
One of the themes that I think we just observed today is kind of the natural disasters and how will that impact the municipal bond market? From your perspective, how do you think that's going to play out? Because it seems to be a thing.
It's a real issue.
Yep.
So think about what BAM does. We spend 99% of our time looking at things that happen not very frequently. One of the things we focus on are natural disasters. So if you think about hurricanes, floods, earthquake risk, and right now wildfires, these are all things that we incorporate into our underwriting process. We evaluate them, and it affects what we guarantee based upon what we think that particular risk is. So we turn deals down if we find that they're in an area that's more prone to exposure to these particular kinds of natural disasters. And we use a lot of analytical tools that are available and some that we've developed ourselves to measure what that severity is. So if you look at Los Angeles, for example, I mean, if you're looking at credits that are county-wide or city-wide in Los Angeles, it's a really big area. The county's 100 square miles. And so even though there's been a couple of terrible fires there, the overall, stability of the county and the city are still quite strong, and they'll have the ability to sort of address this and overcome it.
I can see, though, that being a very quickly evolving, changing topic that must be very difficult to assess.
I think that is true. But remember, the way we look at credit risks, we are guaranteeing the bonds till the last payment is made. So if you have 30-year bonds, the way we look at credit risk is not this sort of shorter cycle.
Sure.
We're looking for, and one of the great strengths of municipal finance is that the issuers and ourselves and the market in itself are aligned so that, the city of Pittsburgh or the city of New York or school districts in local school districts all want to pay, fund their transactions with municipal bonds because it lowers their costs, but they want to pay them back. So, and that's an important thing that, in other kinds of corporate credits, sometimes those interests get misaligned.
Interesting. All right, Sean, thank you so much for taking some time here. Sean McCarthy, he's the CEO, boss around here. We appreciate him having us every year. He's Sean McCarthy, CEO of BAM Mutual. We love coming down here talking about the municipal bond market. There's so many assets and facets to that market, so we always appreciate coming down here. Looking at the markets here, a little bit of green on the screen here. The S&P 500 is up about 0.5%. The Nasdaq's up about 1.1%. So a little bit of bounce back there in the tech space. Yields a little bit higher here, about 4 basis points on your 10-year, 4.57% there on your 10-year. And Bitcoin up 1%, 102,000. Calling that out for Tom on the Upper East Side. This is
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
Happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting live from Lower Manhattan at BAM Mutual offices. Now, as we round out the show, we want to focus back on earnings and back on the market. Boeing stock is up about 4%. The company says that it's going to be reaching its 737 milestone this year, prioritizing the health of its production system and ensuring supplier support. I want to get more breakdown on this, and I have a JetBlue question. So who better to talk to than George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst, a busy man this morning. Hey, George, here's the favorite question. Is the worst over for Boeing?
Wow, is the worst. Look, it seems like it's always hard to say the worst is over. It seems like the trend is definitely going the right direction. It seems like 2025 could be the year they thought 2024 was going to be. Look, I heard a lot of positive things about the manufacturing process in the call. I think that's why Boeing pre-announced they wanted to get some of the forward charges out of the way so people could focus on the message. And I think the message was the factory, especially for the 737, has restarted in the new year. It's building in the mid-20s range, going to 38. It sounded like somewhere near mid-year, which is probably before where most of consensus thought it would get. And going to end the year close to 42 is what I think I heard. I mean, management kept trying to soft pedal it to a degree. And what I heard is quality at Spirit Aerosystems improving. They're happy with it. They don't think it's a limiter. All that's positive for profitability and cash flow. Boeing should make this year a lot better than last year if it all comes true.
Where should that 737 build number be in a perfect world, George? I'm trying to gauge the 38 number, the 40 number, the 42 number versus where it should be, maybe versus where Airbus is with their product.
Well, I guess I would say if you're at the Boeing board level, would you not say it should be in the 60s, somewhere well above Airbus? Look, Boeing ended the last decade before the pandemic sort of driving closer to 60 builds a month. They have plenty of backlogs. I don't think it should be at 60 a month now, but I would expect they should be driving hard towards 60 a month as we go into the middle of the back half of this decade. That's a little complex. Sorry about that. But, the 27s, 28s, I think that 60s ought to be a number they'd be looking at given the backlog. And look, where should they be right now? Maybe they should be, close to 50. So they're halfway to the level they probably should be at right now. This is the moneymaker. This is the one they want to really optimize. And sorry, I'll shut up. Go ahead.
No, I was going to say, it's always like, at least it could be worse, I guess, right? Because it has been worse, so there's something there. I do want to switch and talk to about JetBlue for a second, because Paul and I are just really confused as to the extent to which JetBlue is getting beaten down. We know the costs were higher than estimated, but what do you make of that price action?
Yeah, so I think look, the big full service carriers, I think, showed slightly better results than we had expected, right? And so I think if you were looking at the entire airline space, you could be confused that those better numbers would carry through to the economy carriers, to the more basic economy carriers. And I think what JetBlue told us, it didn't, right? JetBlue lives in a really difficult part of the market. They are, they're low cost, plus they have some premium seating. And I say low cost, but their costs are not as low as like a Frontier, a Spirit, and a Allegiant. And so we think at the bottom of that market in the basic economy world, your best advantage is to be able to deliver seat miles as cheap as possible because you're getting customers on price. Where if you're up in the United American, right, Delta world, you get people on loyalty programs and premium seating and things like that. We know the back end of this business is really competitive, and it's hard for like the JetBlues and Southwest to survive in a world where you got to just deliver the really cheapest seat price, and they're having a hard time doing that given the upstarts. And when they show us an 8% increase in cost per available seat mile in 1Q, no operating profit, that gets concerning that the worst isn't behind us on, excess budget seats in the marketplace.
Can we get some consolidation in that lower end of the market now with this new administration, George?
Look, we could. I think the bigger ones could. I think JetBlue could consolidate somebody underneath them or somebody about the same size. I don't think they'd allow Southwest to go out and buy somebody, but I think you could at the bottom end. Plus, you have some that are hurting, right? You have Spirit Airlines. Question is, can they survive? That could take some capacity out of the marketplace. The challenge is the planes don't go away. They're built, they're aluminum, they last 30 years. Someone gets the airplanes. Where do those airplanes go? Do they go out of market? Do they go in market? But you could get some consolidation too.
30 seconds. RTX, you cover some of the defense guys. RTX doing well?
Yeah, they showed some nice numbers. The guidance for next year was nice as well. Look, they have a lower, I think, view on how much original equipment deliveries they'll make next year than I think is probably practical, especially given what Boeing said today. So they kind of looked for mid-single digits growth in that original equipment deliveries. I think Boeing and Airbus alone with narrow-body deliveries are going to be 12-ish%. It'll be interesting to see how that plays out because the more that original equipment they deliver, the more pressures margins.
All right. George, thanks a lot. We appreciate you. Thank you very much. He covers like all the things.
Everything.
George Ferguson, Bloomberg Intelligence, Senior Aerospace Defense and Airlines Analyst. Well, that wraps it up for here.
Yeah.
There are our 2-hour Muni special at BAM Mutual. I feel like I learned a lot, by the way.
Always do.
Now,
Always do.
yeah, right. I really appreciate that. All right, coming up, a Balance of Power with Joe Matthew is next after this global news update. Happy Tuesday. We will see you back in the studio tomorrow. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Critics blast the Trump administration move to pause most federal loan, grant, and other funding programs.
This decision is lawless, dangerous, destructive, cruel. It's illegal. It's unconstitutional.
Chuck Schumer is the top Senate Democrat. White House correspondent Nancy Cordes.
We're talking about everything from aid to nonprofit organizations to funding for universities. This could even affect loans to small businesses and grants to state and local governments.
Advocacy groups are now preparing to file the first lawsuit challenging President Trump's executive order revising the Pentagon policy on transgender troops that likely sets the stage for them being banned. Now to Bogota, Colombia, where 2 Colombian Air Force planes with deportees from the U.S. arrived today. A deal on flights was reached after a dispute that led both countries to threaten tariffs. New Homeland Security Secretary Kristi Noem posted on social media after riding along this morning on immigration enforcement operations in New York City. CBS New York's Christina Fan.
Several different law enforcement agencies participated in this enforcement operation overnight, and that included the DEA, the ATF, and the Department of Homeland Security. We know at least one person was arrested and taken into custody. We're told the suspect now in custody, facing charges of kidnapping, assault, and burglary.
Texas Republican Ted Cruz chairs a Senate committee hearing today on President Trump's objective to regain U.S. control of the Panama Canal.
President Trump has highlighted 2 key issues. Number 1, the danger of China exploiting or blocking passage through the canal. And number 2, the exorbitant costs for transit.
Public health officials in the U.S. have been told to stop working with the World Health Organization, effective immediately.
The move comes after President Trump signed an executive order to withdraw the U.S. from the group.
For the immediate term, this really does leave us at risk.
Dr. Celine Gounder says the implications for future disease outbreaks could be immense.
We may not have good insight into what is actually happening. We may not have those early warning systems. We may not be able to develop the right vaccine as quickly as we could and warn the American public as quickly as we could.
Stacey Lynn, CBS News, the White House.
The NTSB is investigating a sudden aircraft movement that injured dozens of passengers and crew and hospitalized 6. It happened on a Friday United flight from Nigeria to Dallas. Wall Street, right now the Dow is up 89 points. NASDAQ is ahead 277. This is CBS News.
college students, including the GI Bill.
A Hollywood star was upstaged by climate protesters in London.
Sigourney Weaver was on stage playing Prospero in Shakespeare's Tempest when this happened. Co-star Forbes Masson announcing the show could not go on after two intruders crashed the stage and unfurled a banner protesting climate change. The 75-year-old Weaver was escorted off the stage. So were the protesters, to boos and a few cheers from the audience. No arrests so far. Vicki Barker, CBS News.
Google Maps says it will go along with the Trump administration's move to rename the Gulf of Mexico the Gulf of America and Denali Mount McKinley. It'll make the changes once official government sources are changed. People in Mexico would still see the Gulf with its original, more familiar name. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The money stops at the close of business. Welcome to the fastest show in politics as President Trump pauses hundreds of billions of dollars in grants to everything from state governments to transportation to small business. Takes effect at 5 p.m. Eastern, and we'll get the latest on this from Jack Fitzpatrick at Bloomberg Government. He's also watching the GOP House retreat in Miami as they try to craft a tax and spending plan. President Trump calls for much bigger across-the-board tariffs. We'll explore the administration's approach to trade in an important conversation you will not want to miss with Rob Waters from the Madison Group. With analysis today from our political panel, Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us alongside Republican strategist Matt Gorman of Targeted Victory. We've got a lot to cover here, and it's all after a look at Wall Street. We turn to the markets first with Charlie Pellet in New York. Dead cat bounce, Charlie?
Perhaps, indeed. You got a lot to cover. I've got a lot to cover, too, Joe Matthew. We've got stocks advancing, but making back some of yesterday's sell-off. Let's begin with history, recent history. Yesterday, we had NASDAQ down 3.1%. Right now, we are advancing by 1.5%. We have got the NASDAQ Composite Index up 290 points. To put that in context, S&P up 38, gain there of just about 0.6%. Dow Industrials up 102, gain there of 0.2%. Russell 2000 Index of small cap shares down 0.2%. 10-year currently yielding 4.56%. The 2-year 4.21%. Gold up $17 the ounce, up 0.6%. And West Texas Intermediate crude 73.10 a barrel, down now by 0.1%. Bitcoin holding above 102,650 now on Bitcoin, up by 1.3%. Lots of big questions today about the outlook for the jobs market, especially against the backdrop of Trump administration deportations. Tom Kennedy is chief investment strategist at JP Morgan Securities.
Biggest risk to this call is that he will change the supply and demand dynamic in the labor market by reducing supply. In his first term, Trump ran on deportation in his first term. His deportation rate was about half that of Obama's. So using history as a guide, I do think there's a big risk here, just low probability that mass deportation changes this.
Tom Kennedy of JP Morgan Securities. Earnings news, aerospace and defense manufacturer RTX says it is fully prepared to support President Trump's ambitions to build an orbital missile defense system to protect the United States. This morning, RTX reported earnings, shares now up by 2%. Also out with earnings this morning, General Motors plunging after earnings, GM down now by 10.2%. Recapping, stocks higher, S&P up 39, up 0.6%, dead cat bounce or cooler heads prevailing. Back to Washington, Balance of Power continues. Once again, your host, here he is, Joe Matthew.
Charlie, thank you so much. Watching the rebound today. I don't want it to be a dead cat bounce any more than you are, but not the most inspired recovery yet. We'll keep tabs on the markets for you with the help of the great Charlie Pellet, the voice of Wall Street and the New York subway system. Thanks for being with us here on the Tuesday edition of Balance of Power. I'm Joe Matthew in Washington, here on Bloomberg Radio, on the satellite radio, and on YouTube, where you can find us right now. Search Bloomberg Business News Live. We're standing by for our first briefing. We'll see what comes at 1 p.m. Eastern Time. The White House press briefing with the new press secretary, Caroline Leavitt. We'll bring you live into the briefing room to hear what the conversation is like. Remembering, of course, Sean Spicer's famous first briefing in the first Trump administration, that some folks are still licking their wounds. It goes on in Miami at Doral, the House Republican retreat. As we told you yesterday, they were going down the slide into the swimming pool, dinner on the lawn last night, and lunch, I guess, right now after some morning golf in the Donald J. Trump Grand Ballroom. They're holed up from 9 to 5 to plot the future, we're told, of President Trump's agenda and how to turn this all into legislation. We're going to talk about that in a moment with Jack Fitzpatrick, who's on Capitol Hill watching the appropriations process slowly unfold. But we add another layer here, and Jack has the story as Donald Trump directs broad pausing in federal spending on loans and grants. He's stopping the money. This is tens of billions of dollars we're talking about, and it happens at 5 p.m. Eastern Time. The administration directing all federal agencies to pause a broad swath of federal funding in what is seen as an opening shot here, in the words of Jack Fitzpatrick, in an upcoming constitutional fight over his unilateral ability to stop funding here. And just like that, the headline crosses the terminal. It's a good thing we've got Jack coming in. Trump administration sued over halts of federal grant payments, and it hasn't even happened yet. Jack, of course, is a specialist in appropriations, covers Congress for Bloomberg Government, and joins us right now from Capitol Hill. It's shifting under our feet, Jack, but I suspect you're not surprised to hear a headline like this.
No, we expected lawsuits. The question, I think, is how many lawsuits, or maybe how many plaintiffs in one lawsuit, and how likely is it that this move is the move that could go to the Supreme Court and really hash out a fundamental disagreement that President Trump has with certainly Democrats in Congress and realistically probably a lot of Republicans, because Trump believes he can unilaterally halt the flow of federal funds at least much more than what's dictated under current law. The law that they're fighting over is called the Impoundment Control Act. It was written during the Nixon administration because they had fights over him holding up congressionally approved spending. And Trump and his pick for budget director, Russell Vought, believe that the current understanding of restrictions on the president's power are, in their words, unconstitutional, and that he should get to pump the brakes on federal spending for his own reasons, not for programmatic delays and because he's interpreting the law, but because of what he believes he should do as president. So it's a major legal battle, and the breadth of this order, one, will have a significant amount of a significant effect on a lot of money, but two, raises a lot of legal questions and may be the point that they debate in a lawsuit to settle that disagreement.
Well, so we've got a lot here. Agencies, assuming this stands, Jack, have until the 10th of February to submit their plans on programs, projects, activities that will be subject to the pause here. You mentioned Russ Vought. That is the same day, Feb 10, that it's likely he'll be in the chair as director of OMB. This is one of the authors of Project 2025. Are there any breadcrumbs in that document, and I'll get all kinds of hate mail for bringing it up, that might lead us to an understanding of what Vought wants to do?
Well, when it comes to this, I don't even think you necessarily have to look at Project 2025, because he has said in a number of formats that he thinks the president has greater power to stop spending than the status quo would dictate. So I think Project 2025 gets into it. We also had a little bit of a preview in 2019, the events that led to the first impeachment by the House of President Trump when he delayed Ukraine aid. And of course, later the Government Accountability Office said that was illegal. That was a violation of the Impoundment Control Act. So there's a lot leading up to this. There's a lot of history that Russell Vought has indicating he wants to significantly change Washington's understanding of what the president can do without Congress. And part of that you can link to Project 2025. Part of that you can link to the first Trump administration and the first impeachment. And also, he's said it on the record. He's told members in his hearings, his confirmation hearings in the Senate, that he believes that the current restrictions are unconstitutional. So there's a lot to look at there. And it's clear that Vought is really the engine that drives the train that is this constitutional fight.
So there you have it. This is why we talked to Jack. Now, Chuck Schumer calls this memo blatantly disobeying the law. And I want to just get to the chewy center here, if we can, Jack, what it is the administration is actually trying to weed out. It's not just stopping spending. It's to align with what they're calling presidential priorities on immigration, on DEI. We already saw DEI offices closed. What is it actually that will create the criteria for whether these programs live or die?
Well, this memo ordering the halt in funding is very, very broad. I think it's fair to say it's vague. It says that agencies need to pause funding and review if it comports or conflicts with all the other executive orders that have come out on issues like ending DEI practices. It does not spell out, here's the kind of spending you should pause. When it says the kind of funding you should not pause, it just mentions a couple things. It says don't pause Social Security funding, don't pause Medicare funding, and it broadly says some other funding that goes directly to recipients. But this could block funding that would not appear to be in conflict with other executive orders, but it isn't exempt from this. So there's a concern that money for hospitals, money for heating, for low-income people, for firefighter grants, et cetera, could be caught up in this because it's very, very broadly worded.
Fascinating. How'd you like to be Jack Fitzpatrick trying to cover all of this? There are so many questions. There are not answers to all of them. Jack, as Republican House members gather in Miami here, this is a 2-day retreat that we've been talking about at Doral. These are the guys you cover, specifically the appropriations minds who are together. They're trying to figure out how to manage reconciliation, what to do with the debt limit, how to make everybody happy, get Donald Trump's tax cuts, and then tips, overtime, and all the rest of it in there. What are you hearing? What are they talking about on the patio at Doral that they haven't been able to figure out already? We've been waiting for weeks and weeks for direction on this.
Yeah, I don't know if they're going to come out of this with a specific plan that's chiseled into concrete, but they are getting a little more clear with their ambitions. My colleagues Ken Tran and Maeve Sheehy are down there and have reported, one, the Speaker of the House says they want to mark up the directions, basically the top line outline for a major reconciliation bill next week. So if they can get it together by next week to at least say, here are the broad numbers, here's an assignment for each committee to work under and say, here's how much you can add to the deficit. We want you to subtract this much from the deficit. It's not the bill itself, but it's a fairly heavy lift, and they want to get that done next week. They're still leaving a lot to the imagination with the specifics. It sounds like they're still going for one big, beautiful bill, as Republicans say. They still think they can get an almost unanimous vote on the debt limit through this reconciliation process. If that's politically realistic, you can have a whole debate about that. But they are kind of hitting the accelerator and saying, all right, we're going to get the first stages done by next week, which is ambitious to say the least.
Boy, I should say so, and we're going to be reading about it with the help of Jack Fitzpatrick, reporting for Bloomberg Government. He's live on Capitol Hill right now, just waiting for the members to return. Jack, great to see you, and thank you so much. Find his story, by the way, on the pausing, if we can use that word, in federal funding and grants on the terminal and online. Great work from Jack Fitzpatrick. As we turn our attention abroad, coming up next, the administration's approach to trade. The mini trade war, if we can call it that we had on Sunday, and the impact of tariffs. Donald Trump just updated his stance on this. Rob Waters is up next on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We got dip buyers stepping in, stocks higher across the board. S&P 500 index back above 6,000, 6,060, up now by 47 points, a gain of just about 0.8%. Dow Industrials up 134. The Dow in advance right now of 0.3%. Nasdaq is up 1.8%. The Nasdaq 100 index up by 1.4%. Yesterday, you recall, we had Nasdaq down by just over 3%, but right now showing a gain of 1.7%. 10-year at 4.57%, with a 2-year currently yielding 4.22%. Spot gold is trading higher, up 0.6%, $27.58 the ounce. West Texas Intermediate crude up by about 0.3%. WTI $73.40 a barrel. And Bitcoin very close to $103,000 right now, up by 1.5%. Bright House Financial, which was spun off from MetLife almost 8 years ago, is considering selling itself. That according to the Financial Times. Bright House Financial shares, they are up right now by 16.3%. Recapping, world's biggest tech companies are climbing. S&P up now by 47, up 0.8. Nasdaq up 1.8% with a 10-year 4.57%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash. Balance of Power continues right now with your host. Here he is, Joe Matthew.
Okay, Charlie Pellet, thank you so much. Live from World Headquarters in New York. Great to have you with us on the Tuesday edition of Balance of Power. Yes, I'm Joe Matthew in Washington, where the headlines are flying, not just here, but Doral. And we're connecting the dots between the two as Republican House members gather with Donald Trump in Florida. Donald Trump, of course, making news on everything from tariffs to spending here in Washington as we try to get our arms around this. We just talked about it with Jack Fitzpatrick, our appropriations expert on Capitol Hill. Trump directing a broad pause in federal spending on loans and grants. We're talking about potentially here tens of billions of dollars, maybe hundreds of billions of dollars. There are so many questions about what happens after 5 o'clock tonight. These agencies will have till the 10th of February to put forth plans to see if spending comports with some of the executive actions that we've seen on everything from DEI to immigration and so forth just in the last week and change. By the way, it's only been a week and a day if you're still playing along on your home game. So the fire hose is still spewing, and we wanted to spend time not only on this, but as I mentioned, the news on tariffs last evening, getting buried a bit by the rest of this story today. With a true expert here, someone who brings insights to this program you won't hear anywhere else. From the Madison Group, he's the founder. Rob Waters, welcome back to Bloomberg. It's great to see you.
Joe, thank you for having me.
Always. Your phone's been ringing on this. Who's upset about it? Who's worried? And who could stand to benefit?
Well, when it comes to tariffs, and we're looking at American exceptionalism, I think a lot of the corporations will benefit. China in itself has violated the Monroe Doctrine, and we are just seeing it step by step, both in the Panama Canal. We're seeing it in Latin and South America. We're seeing it, with AI. We are seeing where they are head-to-head competing with us, and how do we control that other than, export control? Tariffs.
Sure, right. I want to dig into what Donald Trump is saying because we're kind of moving into a slightly incremental fashion here. Nothing's really been implemented yet on terms of tariffs. But this review that I mentioned is important. Will it actually change government spending? There are a lot of stakeholders here who could be impacted in so many different industries. You can't quantify it in one conversation.
I mean, the United States is the largest giver of humanitarian aid. It's less than 1% of our budget. Is there waste, fraud, and abuse in it? Absolutely. Can we tighten things? Absolutely. Is a review appropriate? Yes, it is. 90 days, maybe a little long, maybe a little short, but money, once it's spent, once it's programmed, it's hard to unprogram it.
Right. So explain that to us, because you spent enough time on Capitol Hill and in Washington to get how this works. If money is authorized and appropriated, what if the president just decides not to spend it?
He runs up against the will of Congress, and, having worked for two appropriators, I'm well familiar with this. Look, you could zero it out in a budget of the next year, but once it's gone, once it's from a different fiscal year, it's awfully hard.
So lawsuits have already been filed. Someone's always making money, Rob.
Always the lawyers.
Yeah. Well, so does this hold up in court?
I think a review is legal.
Okay.
I
so
think
check back after the deadline.
Yeah, check back after the deadline. Listen, you can always hold funding to make sure it's being spent appropriately or programmed appropriately. You can't zero it out. So I think what the president is doing is actually legal.
Okay, sure.
The time frame might be under question.
Is the media getting over its skis by framing this as an attempt to expand the unilateral authority of the executive, or is that actually what's happening?
I mean, what president doesn't try and expand the executive authority? I think the media is always getting over its skis. I mean, there's not a president in the world that doesn't want to power grab and say this, and there's not a Congress in the world that doesn't push back. This has been going since time and time again.
If this, understood on your point, if this actually goes through, though, and Donald Trump is kind of picking which agency is going to get the funding or the grant money or whatever, that he finally got what every president ever wanted, the line item veto.
True.
Is that about right?
Yeah, that's actually right. But let's see if that goes through. We have to go through reconciliation and everything else, you know.
Oh, I want to get into that with you now. Let's move to tariffs. Donald Trump has been keeping us guessing. We thought there'd be this massive across-the-board tariff implemented on day one as he had threatened. He's been kind of tiptoeing around this.
I think he's been incredibly strategic.
Well, you could certainly make that point on Sunday.
I will make that point.
He did update things last evening, though, in speaking with reporters. Here's what Donald Trump said last night about tariffs.
And remember, again, the word tariff. We're going to protect our people and our businesses, and we're going to protect our country with tariffs. Tariffs on steel, aluminum, and copper, and things that we need for our military. We have to bring production back to our country. The incentive is going to be there because they have no tariff whatsoever. And we're going to look at pharmaceuticals, drugs. We're going to look at chips, semiconductors, and we're going to look at steel.
That's a lot of stuff. Now, he went on to say that he wants to enact across-the-board tariffs much bigger than the 2.5% that's been suggested. Is the whole point here the gambit, the chip on the table, what we saw in Colombia, this short-lived trade battle? It was hours long on Sunday, or will we see
it was absolutely fantastic.
How come?
Well, we have a plane in air. We have a president of a smaller country, you know, negating what we consider a jurisdictional act. He says no, and Donald Trump says big stick. Okay, 25%. 25% to a country that is reliant on its banana and flour exports to the United States would have decimated.
Yeah. Our cup of coffee would have got pretty expensive, right?
I mean.
But they backed off.
Yes.
No tariff.
No tariff.
So is that the model, though? Or are we going to see across-the-board tariffs, and you guys can...
I don't think so. I think the president is using his bully pulpit, and well done him, to show if you treat the United States with respect and uphold our commerce, then you will get a fair deal.
You mentioned Panama Canal. Marco Rubio's first trip will apparently include a stop in Panama.
Needs to be.
Okay, smart business. What does it lead to?
So look, I was in Panama last year, and the moment you get off the plane, Joe, the largest building you see says Huawei on it. I mean, we have an issue, and I go back to this, and you know, talking about the Monroe Doctrine, our hemisphere of commerce and influence has been violated by China. And they continue to encroach in an area of commerce for us. I don't think it's unfair that we review what our process is and that, you know, we put America first.
Is it about pushing China out of these ports on each side of the canal, or is it about actually regaining control? Because again, do you believe the spirit of the statement, or do you take him literally when he says to regain control?
I think we need parity because of so much shipping and commerce.
What does that look like?
That means that as you use our currency as your currency in your bank machine, that you understand who your trading partner and your partner in your hemisphere is.
If it's the Monroe Doctrine,
yes.
You just touched Panama. What about Cuba?
I mean, I think we need to take a good look at, you know, where the good actors and bad actors are.
If you don't want Russia or China to be in the neighborhood, those are the two spots?
I think.
Where else are you looking?
I think we're looking in Guatemala, Honduras. You have to look at all of Latin and South America.
As mass deportations begin. And that brings us back to Colombia. These planes need to go somewhere.
I mean, let's talk about these mass deportations, right? These are people who were criminals, who all the way from back under Obama. that are just being put out. I see, we might not like the messenger, the people in America and whoever's crying on TikTok, which I don't watch, but it's the same policy that has been, enacted under Bush and Obama. I don't see a difference.
Tell me more about that, because we're seeing the first optics today of deportations in Manhattan.
Right.
The cumulative effect. You understand politics too.
I do.
The optics of this.
Yes.
Where is the line of, or isn't there one, of diminishing returns for Donald Trump?
Who is being taken out? Drug dealers, criminals, people who should not be here. And they've been on a warrant list for 10 years.
Sure, understood.
So,
then it becomes where you fly them to, and that gets us back to this situation.
We repatriate them to their country of origin.
That's the way it's got to be, or
that's
do we
the way
need
it's got to
partners
be
in the region who might take refugees or migrants from
I
other
mean,
places?
I honestly don't believe other countries want to take one country's criminals. So
fair enough. As we spend time with Rob Waters from Madison Group, I want to get back to the money.
Let's get back to the money.
Appropriations.
Yeah.
As you mentioned, you worked for 2 appropriators.
I did.
They never had to go down a Doral and deal with the factions of this Republican conference.
No.
Can they craft a plan this week? How's this going to work with reconciliation?
I think from what everyone's hearing, it's going to be one bill, which it should be. There were thoughts that it were going to be two. I think that we're going to see R&D tax credits. We're going to see mortgage deductions. We're going to see a SALT increase. We're going to see things that help commerce that are good, and we're going to have a few things that might be zeroed out
to pay for it.
Yes.
Not nearly enough to cover it, though. To what extent are you?
Well, I don't know how much was the green IRA program? Was it 1.7 trill, 1.017?
And Joe Biden would tell you they helped to chip away at the deficit at it, whether you want to believe that or not. Is this a president who will find religion on debt and deficit while he's in this White House?
I think his eyes on commerce and
growth.
We'll see.
If you're writing a reconciliation bill for this president and you need to get all of these promises in, no taxes on tips, overtime, Social Security, SALT.
Right.
Do you have to make all of these work, or is there a bargain to be had with Donald Trump?
I think there's a bargain to be had. It just depends on what it is.
Okay.
Yeah.
Well, you're the appropriations expert.
Well,
which of these can you leave on the floor and still say that you made good on your promises?
Probably, you could play with some of the mortgage deductions.
Okay, fine. You got to get SALT, though, because you need New York Republicans.
And Washington State ones, too, by the way.
There you go.
Yeah.
Come back and talk to us again soon. He's at the Madison Group. He's the managing partner, but also the founder, and a view that we don't always get here on the broadcast, from those who bring governments together, bring companies together, and lobby both ends of Pennsylvania Avenue and Washington. That's what makes the world go round here. Stay with us. Our panel is coming up next. Jeannie Shanzano is with us today, our Democratic analyst, of course, Bloomberg Politics contributor, alongside Matt Gorman. Targeted Victory, our Republican strategist. We have a lot more to talk about with confirmations. We haven't even touched that yet, so stay with us on the fastest show in politics. On Bloomberg Radio, on the satellite, and on YouTube, search Bloomberg Business News Live. We'll welcome our global television audience with much more to talk about right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all pushing higher. Yesterday, you recall, we had NASDAQ down 3.1%. Right now, it is up by 1.75%. S&P 500 index, to put it all in context, up 0.8%. Best level of the session right now. S&P higher by 45, trading at 6,057. We've got the Dow up 108, higher by 0.2%. The Russell 2000 index of small cap shares, though, retreating by 0.1%. 10-year 4.56% with a 2-year 4.21%. Spot gold up $17 the ounce, climbing 0.6%. 27.57 on the precious metal. West Texas Intermediate crude, we'll call that unchanged on the day, 73.15 a barrel. Bitcoin now up 1.1%, 102,498 on a Bitcoin. World's largest tech companies are climbing the day after that sell-off that shook markets around the globe. American manufacturers are pressing on, and with that story, here's Bloomberg's Vinny Del Giudice.
Factory orders for business equipment rose in December, pointing to firmer investment ahead. Shipments also advanced. The data suggests U.S. businesses are more confident since the presidential election. Some firms also stepped up orders ahead of threatened tariffs. Outside of business equipment, commercial aircraft orders dropped, depressing the headline tally for durable goods orders. The figures are compiled by the Commerce Department. Vinny Del Giudice, Bloomberg Radio.
And speaking of manufacturing and commercial aircraft orders, we've got RTX trading higher by 2.3%. It is an aerospace and defense manufacturer. Also reporting earnings this morning. Boeing, that stock right now flying higher by 3.9%. Again, recapping, U.S. equities are advancing a day after that massive sell-off. S&P up by 0.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much as we prepare for another first in the new Trump White House about 20 minutes from now. In a world in which things happen on time as scheduled, will be the first White House press briefing in the second Trump administration. Caroline Leavitt, not necessarily a household name or face yet, will be holding forth in the briefing room coming up at the top of the hour. If you're with us on YouTube right now, you get a live view. See, we park you right in the briefing room. You can't get a seat like that unless you're assigned one or you're with us on Balance of Power. A lot of questions about even some of the things we've talked about today that have emerged just since last evening when it comes to tariffs, when it comes to the pause in federal funding and grants that these reporters will have, as well as the immigration raids. We do have news on this. We've been kind of waiting for something of a larger scale based on following a couple of raids that we've seen, and we might be getting there as this now moves to New York. There is, in fact, a new Secretary of Homeland Security. Kristi Noem is going to be talking to the troops today and was tweeting earlier today, this morning, about new raids in New York City. Of course, overseeing the federal agency that runs the nation's immigration system. She posted a video on X, said she showed an enforcement operation underway in New York led to the arrest of an unauthorized immigrant with kidnapping, assault, and burglary charges. Again, you're seeing video of this if you're with us on YouTube, or you can find us right now by searching Bloomberg Business News Live. Same radio show with the visuals. Caroline Leavitt will be talking about this coming up, and our political panel gets into it right now. Jeannie Shanzano is here, of course, Bloomberg Politics contributor, our Democratic analyst and political science professor at Iona University, alongside Matt Gorman, the Republican strategist and executive VP at Targeted Victory. It's great to see you both. Welcome. Matt, this is it. And we have a headline that says ICE made close to 1,200 arrests in one day. Now it's on to Manhattan. How are these optics going to play politically for this new president? Will he be criticized for some of the brutal nature of some of these videos, or applauded for making good on campaign promises?
I mean, I think the fact that they're touting it, they're not shying away from it. And I think when it comes to a lot of these folks, child molesters, rapists, criminals, gangbangers, they don't mind being brutal. And the fact that you have Kristi Noem out there on the front lines, Tom Homan and others, they're willing to get cameras out there, shows that they're not afraid of the optics because they believe, and I think rightly, public opinion's on their side. This was something he felt empowered to do from the campaign, and they're not shying away from it anytime soon.
We saw a multi-agency crackdown in Chicago on Sunday. The administration's been promoting, to Matt's point as well, arrests in Colorado, Atlanta, Hawaii, Puerto Rico. Jeannie, now it's in your backyard in New York. We've talked a lot about democratic outrage over the migrants who have been flown to New York City, who have taken over many hotels. Eric Adams was blaming the Biden administration for things spinning out of control. Will this play well in Manhattan?
I think it depends. This is a precarious business, and nobody knows this better than Donald Trump. You know, I just went back, Joe, and looked at his comments on Meet the Press in early December, and what he told Kristen Welker there was, he said, it's going to be horrible when we take a young woman, a wonderful young woman who's with a criminal, and she's taken out and the cameras are focused on her and she's crying and she's crying and she's taken out of the country. That is what Donald Trump knows, and he is absolutely right. So yes, there is widespread support for deporting criminals, particularly violent criminals. And that, even the New York Times poll the other day showed that. The problem is that when you see those pictures of the kind Donald Trump himself was talking about, and that is going to be problematic, because the reality is people support the ends, but the means can be something that they turn on. And that's why these raids that are happening, they are supported right now. New York City has been hit by a strain, as you mentioned, financially, as it pertains to people coming here undocumented, just like so many places in the country. But we also have friends and neighbors and family members, children, the elderly. And when they're caught up in this, that's when you start to see political problems. So they have to be very, very careful not to overread this mandate.
We like data journalism, of course, here at Bloomberg. ICE is reporting, and we've heard some different numbers, by the way, from Tom Homan, who Jeannie just mentioned, as opposed to the agency itself. ICE reporting it's made 1,179 arrests, bringing the total since January 23rd to 3,552. Chicago, Baltimore, Buffalo, Atlanta, San Francisco. Now today, it's the Bronx. Matt, when you look at numbers like that and consider what Jeannie just said, is this something that the administration should be approaching with a sledgehammer or a scalpel?
I mean, when it comes to criminals, people who should not be here and whose own countries are reluctant to take them back, go sledgehammer. I think you're seeing a lot, certainly the left and some of the mainstream media are frankly begging for the optics of crying children and mothers, because they know that it is far, far more lucrative on camera than you have these repatriation flights of murderers and folks who should not be in any country, frankly, should be behind bars. And look, again, this is a symptom here. This is in large part due to sanctuary cities where you could arrest these guys in jail where they should be already. But if for example, Chicago is a great example, Illinois is a great example, they won't cooperate with federal law enforcement. So ICE and federal law enforcement are forced to go in there firsthand. But again, that's something that the Trump administration is going to have to reckon with. The media especially are going to die, metaphorically, for those, crying separated families and those optics around that.
But you could also argue that those difficult optics, Matt, are a deterrent. Is that not part of the plan?
I mean, look, I think the Homan always uses this example, right? Where if say, God forbid, someone is arrested for drunk driving or in the committing of a crime, right? That person gets taken away no matter where they are. They could be in a family of four in a sedan or, again, in an ICE raid. And so that sort of thing, the crime itself causes these sorts of scenarios, not the law enforcement agency that's enforcing the law. Whether you're coming into this illegally or it's a drunk driving arrest on the side of a highway, the same thing happens. There's no differentiation here.
Jeannie, Matt mentions sanctuary cities. Jim Comer is calling, the chair of the House Oversight Committee, launching an investigation here into sanctuary cities and has sent out invitations to the mayors of Chicago, Boston, Denver, and New York. I don't know if anyone's going to show up for this, if they'll need to be subpoenaed. I wonder what your thought is. If you're Michelle Wu sitting up there in Boston, do you take that invitation to come down to make your case?
I think you absolutely do. And I think you go there and you tell them the reality, the history of these cities, when these sanctuary cities were put into place, why, and the economic impact of the people who have come undocumented in the last several years. I would take advantage of that to have a real conversation about this challenge. And the reality is by some estimates, we are talking about 11 million people. A deportation of 1 million each year is going to cost $88 billion. And at some point, as you know, Donald Trump sits down in Doral and J.D. Vance with the Republicans who want to slash this budget by trillions, how is this going to be paid for? Those are very real concerns. And they can say, oh, there's no cost that's too high. And that theoretically may sound right. But what we're seeing in the last few days is responding to an election, which he said he was going to do this and people want it, is an aggressive ramp up of interior enforcement that is going to unfortunately include people who have been living here peacefully. And when that happens, that's when the rubber is going to hit the road. This is very early in this. We need to see what happens as we go down the road and they get beyond those convicted felons and the violent criminals and how this plays out. And the impact economically and on our employers is dramatic. This is not an easy problem. That's why it's been a problem for decades. It requires a legislative solution. These EOs are a step, but they are only a small step, and very little can be accomplished unless Congress addresses it. He's going to try to do that, but we have to wait and see how they do that.
Matt Gorman described some of the difficulty that ICE has had cooperating with authorities in these cities. Matt, you know you can't go into a courthouse in Massachusetts or in Boston and arrest someone for crimes like this. There's a church in Evanston, the suburb outside of Chicago, the Lake Street Church, opening its doors to anyone worried they may be a target for ICE deportation. Should these mayors be subpoenaed if they don't show up?
I mean, you'd think, because all last year you had Eric Adams, Maura Healey, the governor of Massachusetts, were essentially crying, saying we don't have enough funds, state funds, to take care of these migrants coming over the border. We're at capacity. You saw, you know, Eric Adams kind of saw religion on this a little bit after dealing with this for about a year. So when we talk about the cost of this stuff, the cost of housing so many of these people coming across the border, I mean, I saw this firsthand in Yuma, Arizona. We saw there the hospital systems, school systems, the city services were stretched to the gills already in 2023 when I was down there, you know, so that's number one. And I think number two, you're exactly right. These mayors, you know, depending on who's in office, they want more federal funding to take care of these migrants. But when somebody else comes into power and wants to take it off their hands, so to speak, suddenly they don't like that very much. So you can't have it both ways. That's number one. And again, number two, I think you're going to start seeing some of these mayors possibly come down to Washington and try to audition for Resist the Hero, right? If you're Mayor Wu of Boston, you know, she's a young woman. She has a career in this. We'll see. You know, I think it's a good platform for her, too, as well as obviously for Republicans who want to use these policies as a political weapon, too.
Yeah, watch Michelle Wu in Boston. Watch Brandon Johnson in Denver. Jeannie, they're going to try to make their own political benefit here. I don't know if they're practitioners on that level or not, but this is a potential opportunity for them. I think you would agree.
It absolutely is. And, you know, more than just a political opportunity, it's an opportunity to address a very real crisis that is impacting their cities. And they would tell you that firsthand. This is something that we have seen. And this is where the governor of Texas and the governor of Florida, as they bust or flew these people up, they did reinforce in people in other parts of the country the challenges that they've been facing for some time. And so this is an important moment. These issues need to be addressed, but addressing them is expensive and difficult. And so that's where it is going to be a challenge. You have to arrest, you have to detain, you have to adjudicate, and you have to deport. Each step along the way costs money. Somebody has to pay for it, and that will be the American public. And at 11 million plus, that is a big number. And of course, the impact, again, on the flip side of the loss of people working in this country is dramatic. That's why we've in the past entertained the issue of dreamers beyond humanitarian reasons. So there is a smart way to handle this. but that is to secure the border and then allow a pathway for people to be here legally.
I like this panel. Jeannie Shanzano and Matt Gorman. Did Jeannie say dreamers? We're not done with this conversation. Much more in our second hour as we bring you into the White House briefing room for the first press briefing of this new administration. It's next on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's time to meet the press. Welcome to the fastest show in politics as the Trump White House prepares for its first press briefing with a newly minted press secretary at the podium. I'm Joe Matthew in Washington. Thanks for joining. Secretary Caroline Leavitt set to hold forth in a moment in the West Wing, the youngest ever White House press secretary, just hours after Donald Trump called for a pause in federal grants and called again for bigger tariffs. We will bring you into the briefing room and carry this live for you in the first conversation between the secretary and reporters, including those representing Bloomberg. It's all after we take a look at Wall Street today. Bit of a comeback in the cards. Charlie Pellet has the markets for us right now at World Headquarters in New York. Charlie, how's it looking?
Thank you very much, Joe Matthew. Indeed, seeing dip buyers coming in. We have got stocks advancing after yesterday's sell-off. Right now, we got the S&P up 0.8%, higher by 47. Dow Industrials up 142, up 0.3. NASDAQ, which was down more than 3% yesterday, advancing 1.7% today. 10-year at 4.56%, the 2-year 4.21%. Gold up 0.7%, 27.59 the ounce. Bitcoin is up 1.2%, 102,560 on Bitcoin. And West Texas Intermediate crude just about flat on the day, 73.12 a barrel. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Once again, your host, here he is, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much from Bloomberg World Headquarters in New York to right here in the nation's capital. Yes, I'm Joe Matthew. This is the Tuesday edition of Balance of Power on Bloomberg TV and radio as we welcome our global television audience to the conversation just in time for what will be the first press briefing in this new Trump White House. Press Secretary Caroline Leavitt will be at the podium shortly. The reporters have assembled in the room in what is a very crowded scene. We can actually bring you in the briefing room to give you a sense of this. It's borderline claustrophobic as every reporter from the game of politics and beyond try to crowd into the room to be ready to ask questions. Of course, we heard a lot about a shakeup in the seating arrangements. This looks pretty traditional so far. If it's possible, we could get a view of the briefing room here to show what we're talking about. Reporters are doing their stand-ups. They're preparing for the start of this briefing, and there you have it on Bloomberg TV and on YouTube. Boy, if there were ever a post-COVID scene, this would be it. Pretty tight quarters there in the White House briefing room as photographers and journalists of all sort gather to ask questions about what has been a very busy news week. Headline crossing the terminal right now, Donald Trump will meet with Benjamin Netanyahu on February 4th. This was something that we heard reportedly would be in the offing, and can tell you that now as we assemble our political panel standing by for this conversation that's about to take place. Bloomberg Politics contributor Jeannie Shanzano is with us, our Democratic analyst and political science professor at Iona University. She's also senior democracy fellow at the Center for the Presidency and Congress. Joined today by Republican strategist Matt Gorman, Targeted Victory founder, executive vice president. Great to see you both with us here. Jeannie, I want you to get inside the press secretary's head for a minute, or maybe it's better to get inside journalists' heads here, and the questions that will matter. This is a pretty old-fashioned affair here. When you think about this, the daily briefing, it's something that the Trump White House distanced itself from a bit in the first administration, toward the end of the first administration. But we're back here with a clean slate and what is, as I mentioned, the youngest press secretary in White House history. What do these reporters have in store?
Yeah, and can we just say, Joe, because you and I have ties there, I think she was born in New Hampshire and went to school in Massachusetts. That's right. So, you know, she's a New Englander like we are. You know, you're right, the 36th press secretary, a clean slate of sorts. I think one of the things, to your point about the seating, that we're waiting to see is, does she or does Donald Trump, through her, take retribution on any of the so-called legacy media or media outlets that he takes exception to? So I think we'll have to wait and see. But it is a big moment, obviously, for her coming out first time as press secretary to a really, really hungry press corps. And of course, there is no, just so much to be asked. You can hardly believe he's only been in power, a week at this point, and the amount of work he has done. So I think the reporters have a multitude of things that they're going to ask. I'm hearing a lot potentially about the firing of those prosecutors, for instance, as one of the things on the top of their agenda. But of course, economy.
All right, we have our 2-minute warning here, and photographers in the briefing room, as you can see, have their cameras all trained on that door to the left of your screen, that blue door that heads to the lower press office. That is where Secretary Leavitt will come from. Matt, we may have to interrupt our conversation here when she comes out, obviously. Donald Trump was asked, though, at a news conference in August, we're going to have regular daily news briefings like old-fashioned White Houses. He said probably they'll do something. If it's not daily, it's going to be a lot. You'll have more than you want. Will this White House extend the olive branch and have a working relationship with the press?
That's always been funny. It's always been the biggest myth, I think, the Trump administration. Remember, he had a rolling press gaggle his first day in office from the Oval Office at the Resolute desk.
Right.
For someone who's is so hostile to press outwardly, he's very transparent with them interacting. So you might not see these sorts of things with Caroline, but he'll be very accessible. He just did a little gaggle on Air Force One yesterday. So I think you'll see it pretty regularly.
Well, so this becomes the question, I guess, Jeannie. What's the point of having a press secretary doing briefings like this when Donald Trump is interfacing with the press every day? What is the purpose of this exercise when Donald Trump can't seem to get enough of taking questions from reporters?
Yeah, you know, it's fascinating in this day of social media, new technology, the way the president and any other public official can react and interact with people and, of course, the press, as Matt was just talking about. You wonder if this is old-fashioned, but I do think it gives reporters the opportunity to ask and have follow-up questions and get the official word. Certainly they get it from the president when he's willing to speak, but the official
Well, let's
word.
go there right now, Jeannie. She just hit the podium. Caroline Leavitt, the White House press secretary. This is live on Bloomberg TV and radio.
Has most definitely begun. The Senate has already confirmed 5 of President Trump's exceptional cabinet nominees: Secretary of State Marco Rubio, Defense Secretary Pete Hegseth, CIA Director John Ratcliffe, Homeland Security Secretary Kristi Noem, and Treasury Secretary Scott Bessent. It is imperative that the Senate continues to confirm the remainder of the president's well-qualified nominees as quickly as possible. As you have seen during the past week, President Trump is hard at work fulfilling the promises that he made to the American people on the campaign trail. Since taking the oath of office, President Trump has taken more than 300 executive actions, secured nearly $1 trillion in U.S. investments, deported illegal alien rapists, gang members, and suspected terrorists from our homeland, and restored common sense to the federal government. I want to take a moment to go through some of these extraordinary actions. On day 1, President Trump declared a national emergency at our southern border to end the 4-year-long invasion of illegal aliens under the previous administration. Additionally, President Trump signed an executive order to end catch and release and finish construction of his effective border wall. By using every lever of his federal power, President Trump has sent a loud and clear message to the entire world. America will no longer tolerate illegal immigration, and this president expects that every nation on this planet will cooperate with the repatriation of their citizens. As proven by this weekend, when President Trump swiftly directed his team to issue harsh and effective sanctions and tariffs on the Colombian government, upon hearing they were denied a U.S. military aircraft full of their own citizens who were deported by this administration. Within hours, the Colombian government agreed to all of President Trump's demands, proving America is once again respected on the world stage. So, to foreign nationals who are thinking about trying to illegally enter the United States, think again. Under this president, you will be detained and you will be deported. Every day, Americans are safer because of the violent criminals that President Trump's administration is removing from our communities. On January 23rd, ICE New York arrested a Turkish national for entry without inspection who is a known or suspected terrorist. On January 23rd, ICE San Francisco arrested a citizen of Mexico unlawfully present in the United States who has been convicted of continuous sexual abuse of a child aged 14 years or younger. ICE St. Paul has arrested a citizen of Honduras who was convicted of 4th-degree criminal sexual conduct with a minor. ICE Buffalo arrested a citizen of Ecuador who has been convicted of rape. ICE Boston arrested a citizen of the Dominican Republic who has a criminal conviction for 2nd-degree murder. This criminal was convicted of murder for beating his pregnant wife to death in front of her 5-year-old son. And ICE St. Paul also arrested a citizen of Mexico who was convicted of possessing pornographic material of a minor on a work computer. These are the heinous individuals that this administration is removing from American communities every single day, and to the brave state and local law enforcement officers, CBP, and ICE agents who are helping in the facilitation of this deportation operation, President Trump has your back, and he is grateful for your hard work. On the economic front, President Trump took immediate action to lower costs for families who are suffering from 4 long years of the Biden administration's destructive and inflationary policies. President Trump ordered the heads of all executive departments and agencies to help deliver emergency price relief to the American people, untangle our economy from Biden's regulatory constraints, and end the reckless war on American energy. President Trump also signed sweeping executive orders to end the weaponization of government and restore common sense to the federal bureaucracy. He directed all federal agencies to terminate illegal diversity, equity, and inclusion programs to help return America to a merit-based society. President Trump also signed an executive order declaring it is now the policy of the federal government that there are only 2 sexes, male and female. Sanity has been restored. Before I take your questions, I would like to point out to all of you once again have access to the most transparent and accessible president in American history. There has never been a president who communicates with the American people and the American press corps as openly and authentically as the 45th and now 47th president of the United States. This past week, President Trump has held multiple news conferences, gaggled on Air Force One multiple times, and sat down for a 2-part interview on Fox News, which aired last week. As Politico summed it up best, Trump is everywhere again. And that's because President Trump has a great story to tell about the legendary American revival that is well underway. And in keeping with this revolutionary media approach that President Trump deployed during the campaign, the Trump White House will speak to all media outlets and personalities, not just the legacy media who are seated in this room. Because according to recent polling from Gallup, Americans' trust in mass media has fallen to a record low. Millions of Americans, especially young people, have turned from traditional television outlets and newspapers to consume their news from podcasts, blogs, social media, and other independent outlets. It's essential to our team that we share President Trump's message everywhere and adapt this White House to the new media landscape in 2025. To do this, I am excited to announce the following changes will be made to this historic James S. Brady briefing room, where Mr. Brady's legacy will endure. This White House believes strongly in the First Amendment, so it's why our team will work diligently to restore the press passes of the 440 journalists whose passes were wrongly revoked by the previous administration. We're also opening up this briefing room to new media voices who produce news-related content and whose outlet is not already represented by one of the seats in this room. We welcome independent journalists, podcasters, social media influencers, and content creators to apply for credentials to cover this White House. And you can apply now on our new website, whitehouse.gov/new media. Starting today, this seat in the front of the room, which is usually occupied by the press secretary's staff, will be called the new media seat. My team will review the applications and give credentials to new media applicants who meet our criteria and pass United States Secret Service requirements to enter the White House complex. So in light of these announcements, our first questions for today's briefing will go to these new media members whose outlets, despite being some of the most viewed news websites in the country, have not been given seats in this room. And before I turn to questions, I do have news directly from the President of the United States that was just shared with me in the Oval Office. From President Trump directly, an update on the New Jersey drones. After research and study, the drones that were flying over New Jersey in large numbers were authorized to be flown by the FAA for research and various other reasons. Many of these drones were also hobbyists, recreational, and private individuals that enjoy flying drones. In time, it got worse due to curiosity. This was not the enemy. A statement from the President of the United States to start this briefing with some news. And with that, I will turn it over to questions. And we will begin with our new media members, Mike Allen from Axios, Matt Boyle from Breitbart. Mike, why don't you go ahead?
Thank you very much. Caroline, does the president see anything fishy about DeepSeek, either its origins or its cost? And could China's ability to make these models quicker, cheaper, affect our thinking about expanding generation data centers, chip manufacturing?
Sure. The president was asked about DeepSeek last night on Air Force One when he gaggled for, I think, the third or fourth time throughout the weekend with members of the traveling press corps. The president said that he believes that this is a wake-up call to the American AI industry. The last administration sat on their hands and allowed China to rapidly develop this AI program. And so President Trump believes in restoring American AI dominance. And that's why he took very strong executive action this past week to sign executive orders to roll back some of the onerous regulations on the AI industry. And President Trump has also proudly appointed the first AI and crypto czar at this White House, David Sachs, whom I spoke with yesterday, very knowledgeable on this subject, and his team is here working every single day to ensure American AI dominance. As for the national security implications, I spoke with NSC this morning. They are looking into what those may be, and when I have an update, I will share it with you, Mike.
Caroline, you say restore U.S. dominance. Is there a fear that the U.S. either is falling or has fallen behind? And how would the president make sure the U.S. stays ahead?
No, the president is confident that we will restore American dominance in AI.
Yeah, so Caroline, first off, thank you to you and President Trump for actually giving voices to new media outlets that represent millions and millions of Americans. The thing I would add, I've got a two-part question for you. The first is just can you expand upon what steps the White House is going to take to bring more voices, not less, which is what our founder, Andrew Breitbart, believed in, into this room where they rightfully belong?
Yeah. Absolutely. And as I said in my opening statement, Matt, it is a priority of this White House to honor the First Amendment. And it is a fact that Americans are consuming their news media from various different platforms, especially young people. And as the youngest press secretary in history, thanks to President Trump, I take great pride in opening up this room to new media voices to share the president's message with as many Americans as possible. In doing so, number one, we will ensure that outlets like yours, Axios and Breitbart, which are widely respected and viewed outlets, have an actual seat in this room every day. We also, again, encourage anybody in this country, whether you are a TikTok content creator, a blogger, a podcaster, if you are producing legitimate news content, no matter the medium, you will be allowed to apply for press credentials to this White House. And as I said earlier, our new media website is whitehouse.gov/new media. And so we encourage people to apply. Again, as long as you are creating news-related content of the day and you're a legitimate independent journalist, you're welcome to cover this White House.
And secondly, Caroline, you said you laid out several of the actions that President Trump has taken. That obviously it's a stark contrast to the previous administration of breakneck speed from President Trump. Can we expect that pace to continue as the first 100 days moves along here and beyond that?
Absolutely. There's no doubt President Trump has always been the hardest working man in politics. I think that's been proven over the past week. This president has again signed more than 300 executive orders. He's taken historic action. I gaggled aboard Air Force One to mark the first 100 days of this administration, 4 p.m. last Friday, or first 100 hours rather. And this president did more in the first 100 hours than the previous president did in the first 100 days. So President Trump, I think you can all expect for him to continue to work at this breakneck speed, so I hope you're all ready to work very hard. I know that we are. Zeke Miller.
Thanks, Caroline. A question that we've asked your predecessors of both parties in this job. When you're up here in this briefing room speaking to the American public, do you view yourself and your role as speaking on, advocating on behalf of the president or providing the unvarnished truth that is, not to lie, not to obfuscate to the American people?
I commit to telling the truth from this podium every single day. I commit to speaking on behalf of the President of the United States. That is my job. And I will say it's very easy to speak truth from this podium when you have a president who is implementing policies that are wildly popular with the American people. And that's exactly what this administration is doing. It's correcting the lies and the wrongs of the past 4 years, many of the lies that have been told to your faces in this very briefing room. I will not do that. But since you brought up Truth Seek, I would like to point out, while I vowed to provide the truth from this podium, we ask that all of you in this room hold yourselves to that same standard. We know for a fact there have been lies that have been pushed by many legacy media outlets in this country about this president, about his family, and we will not accept that. We will call you out when we feel that your reporting is wrong or there is misinformation about this White House. So yes, I will hold myself to the truth, and I expect everyone in this room to do the same.
And Caroline, just on a substantive question, yesterday the White House Office of Management and Budget directed across the board freeze, with some exceptions for individual assistance, we understand, to federal grants. It's caused a lot of confusion around the country among Head Start providers, among providers services to homeless veterans, Medicaid providers, states saying they're having trouble accessing the portal. Could you help us clear up some of the confusion, give some certainty to folks? And also, is that uncertainty, how does that uncertainty service the president's voters?
Well, I think there's only uncertainty in this room amongst the media. There's no uncertainty in this building. So let me provide the certainty and the clarity that all of you need. This is not a blanket pause on federal assistance and grant programs from the Trump administration. Individual assistance, that includes, I'm not naming everything that's included, but just to give you a few examples, Social Security benefits, Medicare benefits, food stamps, welfare benefits, assistance that is going directly to individuals will not be impacted by this pause. And I want to make that very clear to any Americans who are watching at home who may be a little bit confused about some of the media reporting. This administration, if you are receiving individual assistance from the federal government, you will still continue to receive that. However, it is the responsibility of this president and this administration to be good stewards of taxpayer dollars. That is something that President Trump campaigned on. That's why he has launched DOGE, the Department of Government Efficiency, who is working alongside OMB. And that's why OMB sent out this memo last night, because the president signed an executive order directing OMB to do just this. And the reason for this is to ensure that every penny that is going out the door is not conflicting with the executive orders and actions that this president has taken. So what does this pause mean? It means no more funding for illegal DEI programs. It means no more funding for the Green New scam that has cost American taxpayers tens of billions of dollars. It means no more funding for transgenderism and wokeness across our federal bureaucracy and agencies. No more funding for Green New Deal social engineering policies. Again, people who are receiving individual assistance, you will continue to receive that. And President Trump is looking out for you by issuing this pause because he is being good steward of your taxpayer dollars.
Thanks, Caroline.
Sure.
How long is this pause going to last, and how is the Trump administration recommending that organizations that rely on federal funding make payroll, pay their rent in the meantime?
It is a temporary pause, and the Office of Management and Budget is reviewing the federal funding that has been going out the door. Again, not for individual assistance, but for all of these other programs that I mentioned. I also spoke with the incoming director of OMB this morning, and he told me to tell all of you that the line to his office is open for other federal government agencies across the board. And if they feel that programs are necessary and in line with the president's agenda, then the Office of Management and Budget will review those policies. I think this is a very responsible measure. Again, the past 4 years, we've seen the Biden administration spend money like drunken sailors. It's a big reason we've had an inflation crisis in this country, and it's incumbent upon this administration to make sure, again, that every penny is being accounted for honestly.
Why impose this pause with so little notice? Why not give organizations more time to plan for the fact that they are about to lose, in some cases, really crucial federal funding, at least for a period of time?
There was notice. It was the executive order that the president signed. There's also a freeze on hiring, as you know, a regulatory freeze, and there's also a freeze on foreign aid. And this is, again, incredibly important to ensure that this administration is taking into consideration how hard the American people are working. And their tax dollars actually matter to this administration. You know, just during this pause, DOGE and OMB have actually found that there was $37 million that was about to go out the door to the World Health Organization, which is an organization, as you all know, that President Trump, with the swipe of his pen in that executive order, is no longer wants the United States to be a part of. So that wouldn't be in line with the president's agenda. Doge and OMB also found that there was about to be 50 million taxpayer dollars that went out the door to fund condoms in Gaza. That is a preposterous waste of taxpayer money. So that's what this pause is focused on, being good stewards of tax dollars.
And so this doesn't affect Meals on Wheels or Head Start or disaster aid?
Again, it does not affect individual assistance that's going to Americans.
To follow up on Nancy, do you think there will be a list of who is affected and how much money is affected? How will these contractors and organizations know if they are actually having their funding frozen? And then secondly, if you're willing, can you just clarify, is the end goal of this to essentially challenge Congress or to prove that the president can withhold federal funding? In other words, is this an attempt to pick a fight to prove that he can do this?
No, absolutely not. As it says right here in the memo, which I have, and I'd encourage all of you to read it, it says the American people elected President Trump to be the president of the United States and gave him a mandate to increase the impact of every federal dollar. This memo requires federal agencies to identify and review all federal financial assistance programs and supporting activities consistent with the president's policies and requirements. The American people gave President Trump an overwhelming mandate on November 5th, and he's just trying to ensure that the tax money going out the door in this very bankrupt city actually aligns with the will and the priorities of the American people. So will there be a line?
Yes. Welcome. You look great. You're doing a great job. You talked about transparency, and some of us in this room know how just transparent President Trump has been the last 5 or 6 years. I think you'll do the same. My question is, do you think this latest incident with the president of Colombia is indicative of the global, powerful respect they have for President Trump moving forward, not only to engage in economic diplomacy with these countries, but also world peace?
Absolutely. I'll echo the answer that the president gave on Air Force One last night when he was asked a very similar question by one of your colleagues in the media. This signifies peace through strength is back. And this president will not tolerate illegal immigration into America's interior. And he expects every nation on this planet, again, to cooperate with the repatriation of their citizens who illegally entered into our country and broke America's laws. Won't be tolerated. And as you saw, the Colombian government quickly folded and agreed to all of President Trump's demands. Flights are underway once again.
2 questions on deportations, if I may. President Trump had said on the campaign trail that he would deport pro-Hamas students who are here on visas. And on his first day in office, he signed an executive order that said, quote, the U.S. must ensure that admitted aliens and aliens otherwise already present in the U.S. do not bear hostile attitudes towards the citizens, culture, government, institutions, or founding principles. So should we take this executive order as Trump saying he would be open to deporting those students who are here on visas but, hold pro-Hamas sympathies?
The president is open to deporting individuals who have broken our nation's immigration laws. So if they are here illegally, then certainly he is open to deporting them. And that's what this administration is hard at work at doing. We receive data from DHS and from ICE every single day. From what we hear on the ground, ICE agents are feeling incredibly empowered right now because they actually have a leader in this building who is supporting them in doing their jobs that they were hired to do, which is to detain, arrest, and deport illegal criminals who have invaded our nation's borders over the past 4 years. That's what the president is committed to seeing. Peter.
Very quickly, just following up on the question on immigration first. President Trump, during the course of the campaign in 2024, said the following about illegal immigration. He said, they're going back home where they belong, and we start with the criminals. There are many, many criminals. NBC News has learned that ICE arrested 1,179 undocumented immigrants on Sunday, but nearly half of them, 566 of the migrants, appear to have no prior criminal record besides entering the country illegally. Is the president still focused exclusively, which is a civil crime, it's not criminal?
It's a federal crime.
So I'm asking, though, he said he was going to focus on those violent offenders first. So is violent offenders no longer the predicate for these people to be deported?
The president has said countless times on the campaign trail, I've been with him at the rallies, I know you've been there covering them too, Peter, that he is focused on launching the largest mass deportation operation in American history of illegal criminals. And if you are an individual, a foreign national, who illegally enters the United States of America, you are by definition a criminal, and so therefore you are subject to deportation.
I apologize for interrupting. So to be clear, it's not violent criminals do not receive precedence in terms of the deportations taking place.
The president has also said two things can be true at the same time. We want to deport illegal criminals, illegal immigrants from this country, but the president has said that, of course, the illegal criminal drug dealers, the rapists, the murderers, the individuals who have committed heinous acts on the interior of our country and who have terrorized law-abiding American citizens, absolutely, those should be the priority of ICE, but that doesn't mean that the other illegal criminals who entered our nation's borders are off the table.
Understood. Then let me ask you a separate question about the confusion that still exists across the country right now as it relates to the freeze or the pause as it's described. President Trump, of course, ran one of the key policy items was that he was going to lower prices, lower the cost of everything from groceries, as he often said. But in many of the cases, it would seem that some of these moves could raise prices for real Americans on everything from low-income heating, that program, child care programs. Will nothing that the president's doing here in terms of the freeze in these programs raise prices on ordinary Americans?
What particular actions are you referring to that would...
I'm referring to LHEAP right now. That's the low-income heating program, for example. We can talk about... There's no clarity, so I could refer to a lot of them. We don't know what they are specifically. Can you tell us that LHEAP is not one of those affected?
So you're asking a hypothetical based on programs that you can't even identify. What I can tell you
just to be clear, since you guys haven't identified, let's do it together just for Americans at home. Medicaid, is that affected?
I gave you a list of examples: Social Security, Medicare, welfare benefits, food stamps that will not be impacted by this federal pause. I can get you the full list after this briefing from the Office of Management and Budget. But I do want to address the cost cutting because that's certainly very important and cutting the cost of living in this country. President Trump has taken historic action over the past week to do that. He actually signed a memorandum to deliver emergency price relief for American families, which took a number of actions. I can walk you through those. He also repealed many onerous Biden administration regulations. We know over the past 4 years, American households has been essentially taxed $55,000 in regulations from the previous administration. President Trump, with the swipe of his pen, rescinded those, which will ultimately put more money back in the pockets of the American people. So deregulation is a big deal. And then when it comes to energy, I mean, the president signed an executive order to declare a national energy emergency here at home, which is going to make America energy dominant. We know that energy is one of the #1 drivers of inflation. And so that's why the president wants to increase our energy supply to bring down costs for Americans. The Trump energy boom is incoming, and Americans can expect that.
Please share that. Thank you.
Caroline, I think some of the confusion I think may be here with this pause on federal funding. You've made it clear you're not stopping funds that go directly to individuals, but there certainly are lots of organizations that receive funding and then may pass along a benefit. Meals on Wheels, for one. They provide meals for over 2.2 million seniors. What is the president's message to Americans out there, many of whom supported him and voted for him, who are concerned that this is going to impact them directly, even if, as you said, the funding isn't coming directly to their wallet?
I have now been asked and answered this question 4 times. To individuals at home who receive direct assistance from the federal government, you will not be impacted by this federal freeze. In fact, OMB just sent out a memo to Capitol Hill with Q&A to clarify some of the questions and the answers that all of you are asking me right now. Again, direct assistance will not be impacted. I've been asked and answered about this OMB memo. There's many other topics of the day. Jackie Heimer.
Direct assistance, Caroline, it's going to another organization and then trickling down.
Direct assistance that is in the hands of the American people will not be impacted. Again, as I said to Peter, we will continue to provide that list as it comes to fruition. But OMB right now is focused on analyzing the federal government's spending, which is exactly what the American people elected President Trump to do.
And one question on immigration, Caroline, on immigration. Of the 3,500 arrests ICE has made so far since President Trump came back into office, can you just tell us the numbers? How many have a criminal record versus those who are just in the country illegally?
All of them, because they illegally broke our nation's laws and therefore they are criminals as far as this administration goes. I know the last administration didn't see it that way, so it's a big culture shift in our nation to view someone who breaks our immigration laws as a criminal, but that's exactly what they are.
You made a point of going the worst first. They all have a criminal record?
And welcome to the briefing
If they broke our nation's laws, yes, they are criminal. Yes.
Thank you. On stripping security details for figures like John Bolton, Pompeo, Brian Hook, Senator Tom Cotton said that he's seen the intelligence and the threat from Iran is real for anyone who played a role in the Soleimani strike. He voiced concern it wouldn't just impact those individuals, but potentially their family. innocent bystanders, friends, anyone who's near them when they're out in public. Is the president open to reconsidering his decision?
The president was asked and answered this yesterday, and he was firm in his decision despite some of the comments that you had referenced, and he's made it very clear that he does not believe American taxpayers should fund security details for individuals who have served in the government for the rest of their lives, and there's nothing stopping these individuals that you mentioned from obtaining private security. That's where the president stands on it. I have no updates on that.
Is there any concern that this decision might jeopardize the administration's ability to hire the best advisors for these kinds of positions in the future?
No, in fact, I've talked to the Presidential Personnel Office, who has told me directly that there is such an influx of resumes for this administration that it's incredibly overwhelming. There is no lack of talent for the Trump administration.
Reagan, would he take any responsibility if anything happened to these people? Would he feel at all that his decision was a factor in that?
The president was asked and answered this yesterday. I defer you to his comments.
Caroline.
Reagan, since you're in the back row, I hear you. The back row hasn't gotten much attention in the last 4 years, so I'm happy to answer your question.
And I can project. Does the president intend to permanently cut off funding to NGOs that are bringing illegal foreign nationals to the country, such as Catholic charities?
I am actually quite certain that the president signed an executive order that did just that, and I can point you to that.
More, Caroline, President Trump issued an executive order on increased vetting for refugees and visa applications. Right. Part of that order was considering an outright ban for countries that have deficient screening processes. Has the president considered yet which countries might fall into this category? Are countries like Afghanistan or Syria under consideration for a full ban?
Yeah, so the president signed an executive order to streamline the vetting for visa applicants and for illegal immigrants in this country who are coming, of course, from other nations. It also directed the Secretary of State to review the process and make sure that other countries around the world are being completely transparent with our nation and the individuals that they are sending here. And so the Secretary of State has been directed to report back to the president. I haven't seen that report yet. We've only been here for a few days.
One on the freeze in federal funding. Who advised the president on the legality of telling government agencies that they don't have to spend money that was already appropriated by Congress?
Well, as the OMB memo states, this is certainly within the confines of the law. So White House counsel's office believes that this is within the president's power to do it, and therefore he's doing it.
Okay, so they disagree with lawmakers who say that they don't have the power to freeze this funding.
Again, I would point you to the language in the memo that clearly states this is within the law.
And on what happened on Friday night, the administration fired several inspectors general without giving Congress the 30-day legally required notification that they were being fired. I think only 2 were left at DHS and the DOJ. And then yesterday we saw several prosecutors, I believe 12, fired from the Justice Department who worked on the investigations into the president. As you know, they are career prosecutors, therefore they are afforded civil service protections. How is the administration deciding which laws to follow and which ones to ignore?
So it is the belief of this White House and the White House counsel's office that the president was within his executive authority to do that. He is the executive of the executive branch, and therefore he has the power to fire anyone within the executive branch that he wishes to. There's also a case that went before the Supreme Court in 2020, Scala Law LLC versus the Customs, Bureau Protection. I would advise you to look at that case, and that's the legality that this White House was resting on.
So you're confident that if they bring lawsuits against you, those prosecutors who were fired, that they will succeed?
We will win in court.
And
yes.
Did he personally direct this, given they worked on the classified documents investigation and the election interference investigation?
This was a memo that went out by the Presidential Personnel Office, and the president is the leader of this White House. So yes. Yes. Caroline.
Caroline. Sure. Thank you. Congrats on your first day behind the podium.
Thank you.
President Trump ended funding for UNRWA and also designated the Houthis a foreign terrorist organization.
That's right.
Both were decisions that the previous administration had reversed. So here's my question. Will there be an investigation into who gave the previous administration this terrible advice?
Well, that's a very good point. I haven't heard discussions about such an investigation, but it wouldn't be a bad idea considering that the Houthis certainly are terrorists. They have launched attacks on U.S. naval ships across this world, and so I think it was a very wise move by this administration to redesignate them as a terrorist group, because they are, and I think it was a foolish decision by the previous administration to do so. As for an investigation, I'm not sure about that, but it's not a bad idea. Josh.
Thank you for the question. I appreciate it. Can you give us an update on the president's plans
for his tariff agenda. He spoke a lot about this yesterday, and there's a couple of dates coming up that he's spoken to. Number one, February 1st, he's alluded to both the potential for tariffs for Canada and Mexico, but also China to take effect on those days. What's he thinking about that?
Yeah.
Should those countries expect that on the
Again,
first?
he was asked and answered this question this past weekend when he took a lot of questions from the press, and he said that the February 1st date for Canada and Mexico still holds.
The China 10% tariff that he also had used about last Tuesday going into effect on the same day.
Yeah, the president has said that he is very much still considering that for February 1st.
Yesterday he talked also about sectoral tariffs on, for instance, pharmaceuticals as well as semiconductor computer chips. He talked about steel, aluminum, and copper. What's the timeline on those? Is that a similar sort of coming days thing?
Yeah, so when the president talked about that in his speech yesterday, that actually wasn't a new announcement. That was within a presidential memorandum that he signed in one of the first days here in the White House on his America First trade agenda. So there's more details on those tariffs in there. As far as a date, I don't have a specific date to read out to you, but the president is committed to implementing tariffs effectively, just like he did in his first term.
Finally, he also was asked on the plane when he gaggled about the potential for a universal tariff. He was asked maybe about 2.5%. There was a report about that. He said he wanted much bigger than that. Should we understand that these tariffs would add up? You know, in other words, you might have country-specific tariffs like Canada, Mexico, China. You might have sectoral tariffs like on pharmaceuticals, as well as a potential universal tariff on top of that. Do these stack on one or the other, or would one sort of take precedence over another?
All I can point you to is what the president has said on this front. The February 1st date for Canada and Mexico, also the China tariff that he has discussed. He rejected the 2.5% tariff. He said that was a little bit too low. He wants it to be higher. I'll leave it to him to make any decisions on that front. Phil Weichman.
What the Mexicans and Canadians have done so far, do you have any comment on whether that has met the bar, what he wants to see on fentanyl? Thank you.
I won't get ahead of the president again on advocating to foreign nations on what they should or shouldn't do to get away from these tariffs. The president has made it very clear, again, that he expects every nation around this world to cooperate with the repatriation of their citizens. And the president has also put out specific statements in terms of Canada and Mexico when it comes to what he expects in terms of border security. We have seen a historic level of cooperation from Mexico, but again, as far as I'm still tracking, and that was last night talking to the president directly, February 1st is still on the books. Phil.
Thank you, Caroline. Quick programming note and then a question on taxes. In terms of programming, should we expect to see you here every day? How frequently will these press briefings be?
It is a good question, April. So look, the president, as you know, is incredibly accessible. First day here, he wanted all of you in the Oval Office. You got a 60-minute press conference with the leader of the free world while he was simultaneously signing executive orders. I may add that's pretty impressive. I don't think the previous office holder would be able to pull such a thing off. So look, the president is the best spokesperson that this White House has, and I can assure you that you will be hearing from both him and me as much as possible.
And then a question about tax cuts. The president has promised to extend the tax cuts from the previous term. I'm curious, does the president support corresponding spending cuts as some Republicans have called for in Congress? And will the new Treasury Secretary be leading those negotiations with the Hill as Mnuchin did during the first administration?
The president is committed to both tax cuts and spending cuts, and he has a great team negotiating on his behalf, but there's no better negotiator than Donald Trump, and I'm sure he'll be involved in this reconciliation process as it moves forward.
Caroline, in the announcement that you made last night on the Iron Dome, it said the president had directed that the United States will build this Iron Dome.
Yeah.
When you read into the executive order, it seemed short of that. It asked for a series of studies and reports back to him. Can you tell us whether the president has directed this? And if he is as concerned on this issue, why the suspensions that we saw listed by OMB included so many different nuclear programs, non-proliferation programs, programs to blend down nuclear weapons, and so forth?
First of all, when it comes to the Iron Dome, the executive order directed the implementation of an Iron Dome. It also, as you said, kind of directed research and studies to see if or how the United States can go about doing this, particularly the Department of Defense. When it comes to the other question that you asked about those specific programs, again, I would say this is not a ban. This is a temporary pause and a freeze to ensure that all of the money going out out from Washington, D.C. is aligned with the president's agenda. And as the Office of Management and Budget has updates on what will be kickstarted once again, I will provide those to you.
Just to clarify for a sec what you were saying before on Medicaid. It wasn't clear to me whether you were saying that no Medicaid would be cut off. Obviously, a lot of this goes to states before it goes to individuals and so forth. So are you guaranteeing here that no individual now on Medicaid would see a cutoff because of the pause?
I'll check back on that and get back to you. John.
Thanks a lot, Caroline. As you know, in the first week that the president was in office, signed an executive order as it relates to birthright citizenship, trying to eliminate that. Now, 22 state attorney generals have said that this is unconstitutional. A federal judge has just agreed with their argument. What's the administration's argument for doing away with birthright citizenship?
The folks that you mentioned have a right to have that legal opinion, but it is in disagreement with the legal opinion of this administration. This administration believes that birthright citizenship is unconstitutional, and that is why President Trump signed that executive order. Illegal immigrants who come to this country and have a child are not subject to the laws of this jurisdiction. That's the opinion of this administration. We have already appealed the lawsuit that was filed against this administration, and we are prepared to fight this all the way to the Supreme Court if we have to, because President Trump believes that this is a necessary step to secure our nation's borders and protect our homeland.
On foreign policy, Caroline, on foreign policy, if I may, the president's commitment to the NATO Defense Alliance, is it as strong as the prior administration? Is it the same as when he served as president in his first term in office?
As long as NATO pays their fair share, and President Trump has called on NATO allies to increase their defense spending to 5%. You actually saw the head of NATO at Davos last week on Bloomberg television saying that President Trump is right, and if Europe wants to keep itself safe, they should increase their defense spending. I would just add that there was no greater ally to our European allies than President Trump in his first term. The world for all nations in Europe, and of course here at home, was much safer because of President Trump's peace through strength diplomatic approach.
Thank you, Caroline. And it's great to finally be called on as well in the briefing room. I appreciate that. Of course, we know President Trump just got back from North Carolina and California meeting with victims of natural disasters. There's the 2-year anniversary of the East Palestine, Ohio toxic train derailment. Does the president have any plans to go visit the victims of that toxic spill or just visit in general?
No plans that I can read out for you here. If that changes, I will certainly keep you posted. What I can tell you is that President Trump still talks about his visit to East Palestine, Ohio. That was one of the turning points, I would say, in the previous election campaign, where Americans were reminded that President Trump is a man of the people, and he, as a candidate, visited that town that was just derailed by the train derailment, no pun intended, and he offered support and hope, just like I saw the president do this past week. It was a purposeful decision by this president on his first domestic trip to go to North Carolina and to California to visit with Americans who were impacted by Hurricane Helene and also by the deadly fires. A red state and a blue state, both of which feel forgotten by the previous administration and the federal government. That is now ended under President Trump. He will continue to put Americans first, whether they're in East Palestine, in Pacific Palisades, or in North Carolina.
Thank you, Caroline. On California, could you please clarify what the military did with the water last night as referenced in the president's Truth Social post?
The water has been turned back on in California, and this comes just days after President Trump visited Pacific Palisades, and as you all saw, applied tremendous pressure on state and local officials in Pacific Palisades, including Los Angeles Mayor Karen Bass, to turn on the water and to direct that water to places in the south and in the middle of the state that have been incredibly dry, which has led to the rapid expansion of these fires.
So could you clarify what the military's role was, where the water came from, and how it got there?
Again, the Army Corps of Engineers has been on the ground in in California to respond to the devastation from these wildfires. And I would point out that just days after President Trump visited the devastation from these fires, the water was turned on. That is because of the pressure campaign he put on state and local officials there who clearly lack all common sense. And I will never forget being at that roundtable with the president last week and hearing the frustration in the voices of Pacific Palisades residents who feel as though their government has just gone insane. Before President Trump showed up on the scene, Karen Bass was telling private property owners that they would have to wait 18 months to access their private property. So this administration, the president and his team that's on the ground in California, Rick Grinnell, who he has designated to oversee this great crisis, will continue to put pressure on Karen Bass and state and local officials to allow residents to access their properties. This is a huge part of it. These residents want to take part in their own clearing out of their properties. They should be able to do that. It's the United States of America. What happened to our freedom? Clearly it's gone in California, but not anymore under President Trump. April.
Caroline, welcome to the briefing room.
Thank you.
Several questions. One on the pause. Will minority-serving institutions, preferably colleges and universities, have those monies held back temporarily at this moment?
Again, I have not seen the entire list because this memo was just sent out. So I will provide you all with updates as we receive them, okay?
Secondly, when it comes to immigration, there is this southern border focus. What happens to those who've overstayed their visas? That is part of the broken immigration system. In 2023, there was a report by the Biden administration, the Homeland Security Department, that said overstays of visas were 3 times more than usual. Will there be a focus on the overstays for visas as well?
If an individual is overstaying their visa, they are therefore an illegal immigrant residing in this country, and they are subject to deportation.
And also,
yes.
Lastly, as we're dealing with anti-DEI, anti-woke efforts, we understand this administration is thinking about celebrating Black History Month. Have you got any word on that? Anything that you can offer to us?
As far as I know, this White House certainly still intends to celebrate, and we will continue to celebrate American history and the contributions that all Americans, regardless of race, religion, or creed, have made to our great country, and America is back. Christian Daycock.
Thanks, Caroline. Just real quick, you mentioned the inflation executive order the president signed, but egg prices have skyrocketed since President Trump took office, so what specifically is he doing to lower those costs for Americans?
Really glad you brought this up because there is a lot of reporting out there that is putting the onus on this White House for the increased cost of eggs. I would like to point out to each and every one of you that in 2024, when Joe Biden was in the Oval Office or upstairs in the residence sleeping, I'm not so sure, egg prices increased 65% in this country. We also have seen the cost of everything, not just eggs. Bacon, groceries, gasoline have increased because of the inflationary policies of the last administration. As far as the egg shortage, what's also contributing to that is that the Biden administration and the Department of Agriculture directed the mass killing of more than 100 million chickens, which has led to a lack of chicken supply in this country, therefore a lack of egg supply, which is leading to the shortage. So I will leave you with this point. This is an example of why it's so incredibly important that the Senate moves swiftly to confirm all of President Trump's nominees, including his nominee for the United States Department of Agriculture, Brooke Rollins, who is already speaking with Kevin Hassett, who's leading the economic team here at the White House, on how we can address the egg shortage in this country. As for costs, I laid out the plethora of ways that President Trump has addressed saving costs for the American people over the past week. He looks forward to continuing to doing that in the days ahead. Thank you, guys.
Are Medicaid portals down in all 50 states?
There you have it, live from the White House and the press briefing room. Caroline Leavitt, the youngest White House press secretary to ever serve, interfacing with reporters, as we saw, from all forms of media. In fact, we did get a bit of news on this outside of the issues, which of course reporters were deliberate on, and that was not a surprise based on the conversations we were having right here on Balance of Power ahead of the briefing. I'm Joe Matthew in Washington. Thank you for spending time with us today on Bloomberg TV and radio. That was the first press briefing of the second Trump administration, so we wanted to spend some time with you in the room and really get a sense of the conversation here. You heard Bloomberg's Josh Wingrove asking questions about the president's tariff policy. Still have questions to be answered. We also still have unanswered questions when it comes to Donald Trump's last evening move to to freeze federal aid and grants that could amount to tens, if not hundreds of billions of dollars. That freeze, the pause that will be subject to a review on an agency by agency, program by program level, is set to take effect at 5 p.m. Eastern Time today, roughly 3 hours from right now. The White House pointing to a memo from the Office of Management and Budget, as we heard repeatedly from the press secretary there, with carve-outs, specific lists of programs that will not be affected by this, but still reporters have many questions about the programs that will be affected. We'll follow up with more that we learned from the White House on that. In terms of the tariffs, again, still more to follow. When it comes to mass deportations, the press secretary making it clear that this will not be limited to violent criminals, that anyone who entered the country illegally or in fact overstayed a visa illegally is considered a criminal in the United States and will be subject to deportation. We have a lot to talk about here as well when it comes to the makeup of the briefing room. The press secretary making news that the White House now will restore the press passes of more than 400 journalists who had their credentials revoked by the previous administration. And they created a new seat in the front of the room where the secretary's staff tends to sit that will be called the new media seat, as we saw someone from Breitbart and Mike Allen from Axios, both called on at the start of the session as they try to take a slightly different view and approach to the mainstream media in the room. We'll have a lot more coming up on Bloomberg Business Week, and I'll meet you back here on the late edition of Balance of Power. That starts at 5 p.m. Eastern Time. Senator Dick Durbin of Illinois will join us. Along with our panel, we'll have a lot to talk about as we unpack the first briefing here in this new White House. Stay with us. There's much more to follow on Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good Tuesday afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for this Tuesday, January 28th. I always have to check because, man, time is flying in January. We've had so much going on, and let's not forget that we had today the Fed kicking off, Tim, its two-day meeting.
Yeah, one day after an AI-led rout. Big tech, it is back. We're going to have more on the trade in just a minute. Shares of NVIDIA, Carol, were higher earlier by as much as 7%. Yeah, still up 7%.
It's one of my gainers that I'm going to talk about later on.
Good one.
With our TV colleagues. Big Tech is back. We are going to talk about the trade in a moment. Coming up, though, in the next 60 minutes of Bloomberg Business Week, what you need to know about the big moves in Boeing and JetBlue today. They are moving in a big way, not in the same direction. We'll break it down in just a moment.
Plus, speaking of stock moves, shares of Royal Caribbean riding a wave up following an upbeat forecast. We got the CEO joining us in just a few minutes.
Yeah, they're taking a new move. So we're going to get into that in just a moment. Also, how Silicon Valley's assumptions about artificial intelligence are being challenged by that AI Chinese startup. You know, the one that we talked about nonstop yesterday. We're going to get into that a little bit later on.
Also, speaking of AI, Elon's track record when it comes to efficiency.
Maybe not so good?
Oh, maybe. You'll have to wait and see.
All right, first up, let's get a check on the trade and your top business stories here at Charlie Keller.
Hi, thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ, all advancing. You recall, this time yesterday, we had the NASDAQ Composite Index down by roughly 3%. That's where it ended the day. And right now, we have got NASDAQ higher by 1.7%. S&P, to put it all in context, up 46, up by about 0.8%. Dow Industrials up 110 now, up by 0.2%. Bottom line here, we've got world's largest tech companies climbing after yesterday's sell-off. The 10-year, 4.56%, but the 2-year right now, 4.21%. Spot gold up $21 the ounce, up 0.8%. And West Texas Intermediate crude up 0.9%, 73.84 a barrel on WTI. Bitcoin just above $102,000 now, up by about 0.8%. The aerospace and defense manufacturer RTX says it is fully prepared to support President Trump's ambitions to build an orbital missile defense system to protect the United States. This morning, RTX did report earnings, shares now up by just about 2.9%. Also out with earnings this morning, we heard from Boeing shares gaining by 2.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. All right, you are up to speed on the trade on this Tuesday. Let's get to it because one of the names, actually two names on our radar today, Boeing shares, they are rallying on some optimism from the company's CEO, Kelly Ortberg, on the 737. And then, Tim, you've got JetBlue shares taking a nosedive, in fact, a record plunge on disappointing outlook and rising costs. So we want to talk about these two names.
Oh, let's get more. Back with us is Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Let's go ahead and start with Boeing, George, because Ortberg is optimistic about reaching that key 737 milestone this year. We know it's an important plan. What's the milestone? Why is it such a big deal? Why are we seeing shares higher today?
Yeah, so I mean, I think the milestone he's referring to is that 38 builds per month in the 737. It's the cap right now that the FAA has on Boeing builds until they get, I guess, satisfied that the quality is improved and everything's going okay. I think it was a bit surprising to the market to hear Ortberg and Brian West, CFO, talk about reaching that 38 level. Sound like sort of mid-year-ish, maybe a bit after mid-year. But they weren't talking an end-of-year number. By the end of the call, they were talking 42 737s a month by end of year. I think a lot of analysts didn't have that level of deliveries dialed in for the year. I think that means that consensus numbers for probably cash flow profitability for the company have to get dialed up. It sounded like the factories kicked off the new year, getting back in swing. They talked about a mid-20s build rate right now in the 737 factory, all three lines going. When we closed out the end of last year, it seemed like everything was pretty quiet on those Boeing factories. So I think that was a lot of comfort to the markets as well. So, everything he said sounded good from a, hey, we're getting the factories cranked up again. We'll deliver a bunch of airplanes and we'll generate a lot of cash kind of standpoint.
All right, George, so dare I say turnaround or dare I not say turnaround considering the dismal fourth quarter results we got last week?
Yeah, so, look, I think everybody understood that the 4Q was not going to be great, right? And I think Kelly Ortberg pre-released because I think he wanted to get that noise out of the way. But we knew we were recovering from a strike at this company in 4Q. That we knew that they were restarting production. So, and then there was a bunch of charges, some of them, one-time-ish, non-cash, or at least not immediate cash kind of charges. But, some of the sort of nagging charges in defense maybe were a little surprising, but other charges I think we understood were coming because of the work stoppage. So I think 4Q was solidly in the rearview mirror today. And it's all about what they're going to do in 2025 and on build rates.
Can you make a prediction for us if this will be the quarter that's the turning point for Boeing and for Ortberg?
Look, I think that everything.
Wait, did you just laugh really hard? Go ahead.
I mean, obviously this has been a challenging story at Boeing for a lot of years, but to me it does look like two of the key things are in place to get this turnaround affected, and that is they got the labor agreement done, and they're in the midst of putting Spirit AeroSystems back inside Boeing, and I think those are the two most important keys. Kelly Ortberg even said quality was improving at Spirit AeroSystems. They didn't see it as a limiter. I think taking Spirit AeroSystems, putting them back inside so they're not operating on the profit motive as they were as a supplier, but they're operating on the quality motive, which they will be as an in-house, division of Boeing. I think that's key to the turnaround. So to me, save some exogenous effect, it looks like a lot of everything they need to get in place is in place, and this could be the year.
Hey, listen, the other thing, George, that we got today is we did have Moody's. I mean, they basically stepped a step further away from being cut to junk. Moody's ratings affirming Boeing's credit ratings at the lowest investment grade level, citing the company's relatively large pile of cash. That's important as well in terms of servicing debt.
Yeah, agreed. I think, Boeing retired some debt early. We came in a little bit shy of what we thought they're going to have cash on hand because they retired some debt early to make sure they knocked out of the way any near-term maturities. I think, that's always a good sign for the credit agencies as well. I think right now, the story is Boeing's got to generate some cash, turn it into a positive cash flow story, which sounds like they'll do by the second half if you believe management. I think, that could keep them in investment grade if they get the plan done.
Hey, before we move on to JetBlue, your final thought on Boeing in terms of investors who are listening and just kind of watching what's been, it is still kind of that long journey back for Boeing. It's been a rough couple of years or few years. So final thoughts here before we move on.
Yeah, like I said, I think, from a commercial airplanes is probably, I think, the most important part of the turnaround story. And again, it feels like it's in place. We even heard some good, decent news out of the defense side. There's still just a couple programs that are kind of really dragging on results. They're working on that. They're working on it with the DoD. They're working on efficiencies in there. Boeing's had, again, a bunch of rough years. Aerospace is a long cycle business. But it seems like they've got what's in place, what they're going to need to do the turnaround, do the financial turnaround. So fingers crossed for 2025.
Okay, let's talk JetBlue, because that stock moving in a different direction. Actually having its worst day on record since the company went public back in 2002. Shares down at one point more than 28% today, now down exactly 28%. Weaker than expected revenue forecast, higher costs for the year. Why is it such a struggle for JetBlue right now?
Yeah, so I think this shows part of the challenges of cutting capacity to try to get fares up. Look, I think there's too much capacity in the basic economy world in the U.S., and JetBlue recognizes that as well. And so they're cutting capacity so they can improve fares. They didn't improve a lot during the quarter. And the problem is, as you cut capacity, your cost per available seat mile start rising. And they're guiding to, I think, an 8% increase for that cost per available seat mile in 1Q. And so, go ahead, I'm sorry.
Well, I was just going to say, I'm a little confused about where JetBlue is in the ecosystem of companies out there offering air travel. Because it's not an ultra low-cost carrier by any means. The Mint product, people argue, is the best transcontinental business/first class experience that's out there. You see that on message boards everywhere. What is JetBlue's identity?
They live in the middle ground, right? And the middle ground is the hardest place in the world to be in. Southwest and JetBlue, I kind of cluster together. They're not really low-cost carriers. They don't deliver seat miles as cheap as a Spirit, as a Frontier, as an Allegiant. When you live in that middle ground, right, if you're a low-cost carrier, you offer seats for sale, and your biggest selling point is, hey, I can give you the cheapest seat to your destination. You need to have really low cost to do that. Southwest and JetBlue don't have it, so they have to offer something else, a Mint product, some sort of premium product, some sort of different experience. It's hard to get people to pay up for it in that middle ground. They'll pay up for it in Delta, American, United, right? They understand that there's some premium products there that they want to pay for. But again, when you get to that really cost-conscious consumer, it's a challenge, and JetBlue just doesn't have enough Mint seats, I think, to make a difference. So and they're flying in, I would call, some of the most contested air. They're flying in East Coast air, Caribbean air. One of the bright spots is going to be flights into Western Europe. They're small, they don't really move the needle, but I think they're seeing some pretty good experience. So that's the challenge, is here in the middle ground, they got to find a way for people to want to select into JetBlue. It isn't just the front of the airplane, right? The majority is the back of the airplane. They need those people to select into JetBlue, and it's hard without offering them the cheapest possible fare, and you've got Spirit and Frontier sort of weighing on this market on the low end.
So in terms of strategy, we know that they had some setbacks, right? Federal courts blocking their acquisition of Spirit, or their planned acquisition of Spirit, and then also broke up a joint venture with American Airlines. So is that the way forward? Is that going to be part of the turnaround that tells a different story for JetBlue going forward? And do we just need to be patient, that it all takes time, like the CEO said on the conference call?
Yeah, so this is the challenge, right? I think you need capacity to come out of the marketplace. And so some airlines have staying power, some don't, right? We've already seen some with problems like Spirit Airlines that went through bankruptcy, cut a bunch of capacity. That starts to help. If you've got a good balance sheet, JetBlue's been pushing out maturities. They've got a good balance sheet. You can hang in there until the market, until it reduces capacity. It'll happen by some failures. It could happen by a merger. But I think what JetBlue has to do is hang on here while capacity comes out of the marketplace. They can't do it all themselves. They'll lose share, right? We see the problems they have with cost per available seat mile. So I think they need someone else in the marketplace to blink. And we go from here to earnings for Frontier, Spirit, Allegiant.
Right.
Let's see how they're performing in this marketplace.
Yeah, and see what patience investors have and what the regulatory environment looks like for potential M&A during this administration. Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson, always a treat when you join us here on a Bloomberg Business Week. Now to another stock moving big time today.
Yep, we are talking about Royal Caribbean Cruises. Shares are riding quite a wave higher, up about 13%, more than 13% at their high, almost 14%, in fact, hitting a record intraday, up the most in more than 2 years. It is the top gainer in the S&P 500, and it's lifted the entire group because Norwegian and Carnival also top gainers in the S&P 500. This is coming after Royal Caribbean reported a full-year profit forecast that blew past expectations as cruise demand continues to ramp up. They're also talking about getting into another area of the cruising world. For more on the outlook and what's driving metrics, we welcome the president and CEO of Royal Caribbean Group. He is Jason Liberty. He joins us from Miami, Florida. Jason, it's great to have you here with us. How are you?
I'm doing great, Carol, and thank you and Tim for having me today. Obviously, it's a great day on the share price, but it's a great representation of another incredible year here at the Royal Caribbean Group, and a really strong outlook for 2025.
Tell us what surprises you about the consistency in demand and the optimism that you are seeing, certainly in the cruising world, and what comes to demand. What's surprising you in how the strength that you are seeing?
Yeah, well, I think there's a few things that I would point to. I mean, certainly we have a lot of great demographics on our side in terms of more millennials coming into the space, multi-generational travel, a lot of active wealth transfer, and we see that more and more, which has been a surprise to me, just how much multi-generational travel where you have the patriarch or matriarch of the family paying for generations. I think that's been a little bit of a surprise. And there's also been just a continued flight to quality. We've invested so much in our ships and our brands and our destinations for so many decades. We're really now seeing these flowers bloom as we see consumers who are very healthy. They have great balance sheets, they have great jobs, and they're high-paying jobs, having this flight to quality for our brands and for our destinations.
When you talk about that flight to quality, break that down for us, where there's strength in the business and where you're seeing particular strength, and if there are any areas where you're not seeing strength.
Yeah, well, we are actually seeing strength in all markets that we source from. We're also seeing strength for all the different places that our ships go, whether that's in the Caribbean, Alaska, the Northeast, Europe, Australia, Southeast Asia, China. We're seeing strong demand kind of across the board, which is, I think, really great. We're also seeing, again, elevated spend on our ships, and that's really across the board. A lot of it is in the gaming, the beverage area, on the culinary side, spa, shore excursions. So people are really looking to make sure that they grab the experiences that they want to have, and they're willing to not only pay a little bit more money for that, but they're also willing to have more repetition of that. And that's how they're expanding the memories that they're building with their friends and family.
How much is that wrapping up, Jason? That is something that I've seen throughout the cruise industry, that it's not just about buying the ticket to get you on the ship, but it's about what you do once you're on the ship and possibly go off to other destinations, those bookings, right, that add to the experience, but they also add to your revenue line, right, and your profit line.
Yeah, that's exactly right. One, I think that we've gotten a lot better, whether it's through AI or other disruptive tech, to really take friction out of the experience of shopping with us, whether that's on the ticket side or whether that's also on the onboard side. And what we're doing is we're able to enhance the experience so they can do all the different things that they want to do. And in reality, while it's still very frustrating to me, while we're increasing share of wallet, we're still at a very significant discount to land-based vacation. And so for us, like we focus a little bit less on what's happening with our cruise competitors. We're trying to take a larger share of the $2 trillion marketplace in travel leisure. And for us, having the experiences that our guests want to do and also being able to make it easier for them to shop with us is winning for us.
The pace of bookings this year relative to last year, what does that tell you about demand where we're, when we're a little over a month past what is referred to in the industry as wave season?
Yeah, so the past couple of years, wave has been elevated not just for us but also for the entire industry, and we're continuing to see those waters rise here on the wave season. So we're seeing record booking weeks, we're seeing elevated pricing, and we're seeing a consumer that is not only willing to pay a little bit more money for their vacation experience, but they're also looking to book further out. So the booking window is continuing to extend. And they're also doing more and more pre-cruise booking activities for the activities that happen on the ship and off the ship to make sure they get the vacation experience that them and their family and friends want to have.
Are you surprised by it? You've been doing this a while. Like, are you surprised by the pace of demand?
Well, I have been doing this. I've been in the seat for a little over 3 years, and of course I was the CFO before that. So I've been in the industry a while. Certainly, you're seeing an elevated demand for experiences. So clearly, coming out of COVID, you've seen a few different changes in behavior. One of which is very comfortable booking and interacting through technology. So we're able to take friction out of that experience. But you're also seeing just a trade. Buy a lot less stuff. We want to buy experiences. We really appreciate the time with our friends and family, and we want to make sure that time that we have is one that is not only exceptional, but it's also with somebody who we trust will deliver that for us. And I think we have that trust. We value that trust with our customers each and every day.
All right, we want to talk a little bit more about the business, but Jason, we've been asking everybody who comes on, a CEO or anybody who runs an institution, a company, an organization, the dynamics in the backdrop, anything that could be impacted by policies out of the Trump administration, anything coming out of government. And I think about, we've talked about various policies that could lead to inflation, tariffs, on possible goods that could increase costs, immigration, the impact on the labor force. So I'm just curious, you guys are floating cities, you're massive ships. So the dynamics of kind of the economy, the U.S. economy certainly impact you. So I'm just curious, anything in particular that could come out of D.C. that you're watching very closely?
Well, look, I think as we always have, we're going to work very closely with the administration. But I think what we're looking for is a healthy and happy consumer. And I think as long as the consumer has confidence in their spending and of course they seek great vacation experiences, which we think they're going to do, I think we feel very bullish about the future spending behavior of our customers. The other point that I would just add, which I think also brings us great comfort on whether if costs do rise in some form or fashion or there is inflation, is that point I made earlier that there is a significant gap to land-based vacation. There's a lot of value for the consumer in our different vacation products, and that's a good hedge for us if there is any type of change in the winds.
How are you guys doing at controlling costs right now, specifically when it comes to labor? Are you getting all the employees you need, and where are you getting them from?
Yeah, well, most of our employee base are international crew, so we're not really that impacted by rises on the wage side. Shore side, certainly, like every other company, there's inflationary pressures that can impact wages for our shore side and our corporate offices and so forth. We actually, our cost guide for this year was for us to be flat to up 1%. And we've been able to do that by really managing our supply chain, leveraging the scale as our business grows, and having a team that wakes up every day and says, how do we do it better? And doing all that and making sure we're enhancing the guest experience and we're not cutting the guest experience, because we feel that it's important for us to live up to our marketing and our reputation each and every day.
Jason, could any of that supply chain be impacted by tariffs?
I don't think so. Because we source a lot of the things that we source are really from here in the U.S. We're not really expecting any tariff impact. But we're watching it just like we're watching other things, on more in terms of how it would impact our customer, less so how it's going to impact our cost base.
What about when it does come to that international labor pool? Are there concerns about a crackdown on immigration affecting the way that employees on your ships are able to be on your ships when they're docked in the U.S.? How do you handle that?
Yeah, well, it's obviously something that we're always looking into, but I don't think that's a very high risk. We're an international maritime organization. Our crew are international maritime. They're really focused on being on the ships. So obviously we watch it and we try to manage it, but we don't see that as a high risk in terms of any policies that can come forward there.
Hey, listen, we want to talk about you guys getting into the river cruise market. Before we do so, you talked, though, a lot about destinations and experiences for those who get on ships. You guys have had great success with Coco Cay Private Island destination. That's in the Bahamas specifically. How could Perfect Day Mexico, which is another such destination, kind of drive some of that onboard spending that you were talking about a little bit earlier, and ticket prices when it opens in 2027?
Yeah, so I would say a few things about the destination experience. So you take, as you gave an example, a Perfect Day at Coco Cay, which, by the way, is the highest rated, has the highest Net Promoter Score of any other destination we go to in the world. Because we do an exceptional job of delivering thrill and delivering chill. But we're not able to deliver that experience to all guests in the Caribbean. And so Perfect Day Mexico will allow us to not only ensure that especially on our Royal brand, has at least one perfect day when they're in the Caribbean, but it's also going to expand the catchment area of areas like Texas and west of the Mississippi, which will have an easier way to get to places like Galveston, where they can go in and have a perfect day. We're also adding Royal Beach Clubs, which will also expand the experience in places like Nassau, Bahamas, and also in Cozumel. So what we're trying to do is, again, continue to enhance the experience offering. We see ourselves as an experience organization with really a vision of, what we've always been great is delivering the best vacations in the world, and we want to be able to deliver a lifetime of those vacations over somebody's life.
And I just want to make sure I heard correctly, but in terms of Perfect Day Mexico, specifically driving onboard spending and ticket prices when it opened, can you give us any kind of color on that or specificity?
Yeah. Absolutely. I think one of the surprises when we opened Perfect Day at Coco Cay is not only did we get high demand to go to the island and people were willing to pay for things like water parks and overwater cabanas, but we also saw ships that touched Perfect Day Mexico got elevated pricing. And so we expect that's going to be the same thing here, is when you deliver the destination and the experience, our guests are willing to pay for that, and that's what we expect to occur in Mexico. It's also what we expect to occur with our Royal Beach Clubs as well, as we'll deliver an experience that's far superior to what is currently being offered in those different destinations.
I'm just going to say I'd like some thrill and chill right now because I'm tired of cold New York. I'm just going to put that out there.
All right, sign up, Carol. Speaking of,
it's available. It's available.
Okay, good to know.
No, I would say it's available, and I'm happy to help you book a cruise.
Well, let's talk about what's going on in the river cruise market. I mean, my in-laws are back from a river cruise this fall. My sister's back from a river cruise, both of those with different companies in Europe. Now you guys are getting in through the celebrity business. Why now?
Yeah, well, why now is, we've been seeing for some time, a growing trend with our guests that they're looking for additional vacations, not a substitute for going on a cruise, but additional vacations. And when we look at what are those additional vacations that they're going on, one of the things that we've seen a rise in is on the riverside. And so as we, again, seek to deliver a lifetime of vacations, and we want to leverage, all the, having a single loyalty program, great reciprocity across our different brands, we're enhancing the flywheel, and we're investing in that flywheel so that we can get more reps out of our guests. And so we have to listen to what our guests are looking to do, and we have to be focused on how do we keep our customer in our ecosystem. And one of the ways of doing that is expanding the offering, and we think River is, it's similar. It's certainly not exactly the same as an ocean cruise, and we think we can elevate that vacation experience significantly, not just on the ship in itself, but also on land.
So where are you going to go with those cruises?
Well, it's going to start off. We've ordered 10 ships so far, and it is an initial order, and those ships will be in Europe. But our expectation is we'll grow it in Europe, and we're also going to grow it around the world. We have a massive global footprint. We go to 1,000 different destinations. We source from all over the world, and we think there's a great opportunity to match those guests also on the riverside.
All right, going to leave it there. Listen, Jason, thank you so much. Covered so much ground and really appreciate it joining us to talk about the business and the outlook. Jason Liberty, folks, there. He's President and Chief Executive Officer of Royal Caribbean Group, joining us from Miami, Florida. As we said, this is one of the standout performers. It's been the top gaining stock in the S&P 500 today, up about 13% as we speak, and it's really just lifted the entire cruise group.
Well, earnings certainly front and center. So too is tomorrow's Fed decision. The policy-setting arm of the U.S. Central Bank kicking off its two-day meeting today. The Fed likely to keep rates unchanged in its first decision of the year. Yet, we can guarantee there'll be lots of questions about the new Trump administration, its impact on the U.S. economy, inflation, and more. So, with more on that, with us is a former U.S. Treasury and White House National Security Council staff member joining us from Cape Canaveral, Florida. Steve Skanke, good to have you back with us. Usually in a Fed week, we're talking about the Fed quite a bit on Monday, talking about the Fed quite a bit on Tuesday. With yesterday's rout in tech stocks, as it relates or triggered by concern over what China has been able to do for much less of a cost, or so it says, one Chinese startup, do you think questions about AI and the Chinese economy and the tech industry here in the U.S. will come up at all during tomorrow's press conference?
I would be surprised if it didn't. Well, first, thank you for having me on, and let me just add, maybe we should do this from a cruise ship sometime. I thought that was actually a nice conversation you guys just had. But yes, it has to come up certainly within the conversation during the meetings. How much Jerome Powell will allow the the conversation to go that way during the press conference. I think that's to be determined. More likely to have conversations or questions about the deportation, impact on inflation, tariffs, threat of tariffs, disruption of supply chains, and what impact that has on inflation and economic growth.
You know, it's interesting too because, you know, on that AI route yesterday, which we were obsessed with and trying to make sense of, and I think the world is still, Deutsche Bank's U.S. economists came out and they wrote a note to clients, Steve, and I just want to share it with you. They said they acknowledge a scenario where a tech-driven sell-off hits American household wealth and ultimately slows down the up-to-now irrepressible, consumer. Looking backwards, Deutsche Bank economic model showed that U.S. consumer spending growth, if not for the 2024 rally in equities, would have come in around 2% for last year rather than the 3% estimate. So I do think about like how, and I'm curious the questions that you guys have been maybe getting from investors or the conversations you've been having the last 24 hours, if that AI spend and euphoria that's been maybe behind a big part of the rally that we've seen over the last 2 years doesn't continue or has been built on kind of a shaky or different foundation that maybe isn't true, what that could mean in terms of economic growth going forward.
We get questions about that all the time, and what's remarkable is almost without exception and irrespective of industry or sector that our clients are working in or investing in otherwise, or where they have their own businesses, they are using AI in increasingly different ways. Some of it they're not spending very much on, but as they get into it, try it, see how it works, see what a difference it makes in their work planning, processing, customer outreach. They just use it more and more, and as they do that, then they're happy to pay for it. They're happy to invest on it in the company. I've been surprised at how quickly that has come, and I think the impact of the Chinese arrival will only accelerate that. Yes, it's going to have an impact on some of the big names that have been making a lot of money on this in the United States, but I don't think it's going to diminish it, and I don't think that the companies who are spending money are going to stop spending, maybe not as much, and that'll be positive for profits, which ultimately then will drive the stock market further and continue to support that consumer spending.
So should the Fed actually address this tomorrow?
They should have a conversation about it internally, because at the end of the day, it does go to the issues that you guys have mentioned: consumer spending, industrial production, how some of the semiconductor sector operates. What does this mean for more investment in semiconductor production in the United States? If the total demand is going to be different, but the big question is, will it be an offset against some of the other likely inflationary policies or initiatives of the new administration?
All right, so here we are, though. It is the first Fed meeting of 2025. They've kicked off the two-day meeting today. What do you think is the right monetary policy in your view right now? And the messaging, right? Because we really don't expect any kind of move yet tomorrow, but the messaging could be key, especially we're just off of the first press conference by the White House press secretary from the new Trump administration. There was a lot of questions about a lot of different policies. We know President Trump has been very busy in his first week or so here in the White House. There's a lot coming at people in general, at investors, at companies, so also at the Fed, right, as they try to determine monetary policy going forward. So what is the right messaging right now?
The right messaging, Carol, I believe, is steady as she goes. The Fed can applaud the positive core PCE inflation metric that it's likely to get on Friday. I mean, it's estimated based on CPI and producer price index. That's very attractive. 3-month and 6-month annualized core PCE inflation has come down. 6 month is at a 12-month low. They certainly want to mention that. Also, the continued growth in the economy. The big surprise in the jobs number for December, that was 100,000 jobs more than what the consensus estimate had been. And so I think the Fed is in a good position, and I think that they ought to message their thought about economy looks good, inflation is coming back to our targets, we're comfortable where things are. It's time to pause and see what might be different, and for them really to exude confidence, belief that what they're doing is right, which I happen to think it is.
Right.
And not get sidetracked. President Trump in his Davos message talked about getting interest rates down.
Right.
Well, that will likely be a source of questioning into the press conference tomorrow.
All right, Steve, we gotta run. Forgive me. Steve Skanke, Chief Economic Advisor at Keel Point, joining us on this Tuesday. When we come back, the Chinese AI startup that's challenging AI assumptions. What's going on behind all those closed doors in Silicon Valley following yesterday's reveal? That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, and yes, Russell 2000 all advancing. Just about this time yesterday, we had NASDAQ down by 3.1%. Right now, we do have NASDAQ gaining 2%. To put that in context, S&P up 0.9%, up 55 right now. S&P trading at 6,067. We have got the Dow Jones Industrial Average up 116, up 0.3%. And again, NASDAQ up by 2%. Russell 2000 up by just under 0.1%. World's largest tech companies climbing today. 10-year, 4.55%. The 2-year, 4.20%. Gold up $23 the ounce, up 0.9%. West Texas Intermediate crude up 1%. 73.91 a barrel on WTI, and Bitcoin now up by 1%, just above $102,000. The UK is considering making households who only use streaming services such as Netflix and Disney pay the BBC license fee as part of plans to modernize the way it funds the public service broadcaster. Netflix right now down 0.1%. Disney shares down by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, from OpenAI to Meta and more, how in Silicon Valley, AI executives and employees are urgently, parsing the technology of the Chinese AI startup DeepSeek, something we talked about nonstop yesterday, continuing the conversation today. The questions out of Silicon Valley, they're questioning their assumptions about the economics, Tim, of AI and building it out.
It is today's big take, meaning it's what our editorial team deems a must-read story. It's also among our most read stories on the Bloomberg terminal. Check out Rachel's story and more from Bloomberg The Big Take on Bloomberg and at Bloomberg.com/Big Take. With us is that Rachel. She's Rachel Metz. She's Bloomberg News AI reporter. She joins us from our Bloomberg News bureau in San Francisco. Rachel, as you point out in the piece, DeepSeek, for those in the know, had released LLMs a couple times over the last 18 months to 2 years. There was that first open source AI model, DeepSeek LLM, in late 2023. 2 more advanced models, V2 and V3, came out in mid to late 2024. Why did the news that was absorbed yesterday feel so dramatic when others have been watching DeepSeek for so long?
I mean, I think part of what you were seeing was excitement surrounding, or is, I should say, since it's ongoing, excitement surrounding R1, which is essentially a model that can reason, kind of like humans do. I mean, I would call it reasoning with quotation marks because it's not quite doing exactly what we do, but it's similar to an existing model from OpenAI. Anthropic, which is a rival of OpenAI's, has also put out something similar. R1 is built on top of another model that DeepSeek recently released. And that combination of those things, it did what it did for not very much money in a very short period of time. And it also seems to have come up with some ways to build these things more efficiently, to build it more efficiently, and to have it work more efficiently. And those are all things that I think are getting a lot of people's attention.
All right, but does everybody in Silicon Valley buy it, believe it, that it really is efficient, that it doesn't cost as much? Like, are there still some questions to be answered?
There are questions to be answered. I think one of the things that's great here, though, is this company has released the model as an open source model. So that means that companies such as Hugging Face, and they're doing this right now, they can put together their own versions and deploy their own versions of this model and get a sense for how well it stacks up. We're also starting to see companies get very interested in using this model. So you may see more and more companies asking, say, a company like Databricks, hey, if they're a customer of Databricks, hey, could we use this from you? Companies that offer lots of models are seeing some very big interest from their customers.
How do we look at the geographic origins of DeepSeek coming from China and whether that could be an issue with adoption outside of China? Like, would U.S. companies be as willing to use this LLM as perhaps those that are built here in the U.S.?
That's a great question. I would guess that for some companies, it would be probably a no. For some companies, it might be, or they might want to deploy or like roll out their own version of it. Since it's open source, you can do with it kind of what you want. So we might see some of that. I mean, what I expect we will certainly see is different companies, AI companies themselves, sort of rebuilding and trying to figure out how well this actually works. And maybe you'll see some people rolling it out as well.
All right, let's talk about those people in Silicon Valley. I mean, everybody seemed like it was a who's who of folks kind of tweeting or making comments on social, and it was like, yay, great job. But it also, Tim and I were kind of talking off air, is it like, yay, great. It's like when your, nemesis gets the job you want, and you're like, congratulations, but I hope you fail. Is that, I mean, tell us about, sorry, but it's like, what's going on in Silicon Valley? Is everybody like, oh my God, Meta, Amazon, everybody who's been investing so much are saying, well, wait a minute.
Yeah, I think I think it's that kind of like mixed, probably some people are having mixed emotions, right? Like, wow, this is interesting. Maybe they did some interesting things here that we can replicate in our own work. Or maybe it feels validating in a sense, like OpenAI may feel validated by this, that they're on the right track with their own work with O1 and O3. But yeah, I think some people are also like, wait, how did they do this? In what did they do exactly what they're saying that they did in terms of spending only a very small amount of money? Usually these models cost lots and lots and lots of money to build. That's one of the things that got people most excited and also freaked out, as you could tell from the way the stock market reacted. If it doesn't cost a ton of money, you don't need a ton of high-powered chips to build these things, then what does that say for the future of the chip market, especially a company like NVIDIA that is the biggest maker of AI-geared chips?